All right, I think it's time to get started. The others will join us in due time. Um, okay, so good morning, everyone. It's a delight to have you all here. So we'll be going straight into our business for the day. And let me start by appreciating every single one of you for taking the time to be in class today. Thank you for your presence. All right, so here's what we're having today. We're going to we'll meet our facilitators, and then I'll share a bit of my story and my journey into cryptos. And then we'll take the first module by our guest facilitator, Mr. Additional Denujadele. And then I'll take up the next the third module. And then we have our Q&A and put up notices as necessary. And then we end it with a thank you. Okay, so let's get started this way. We'd like each person to please let us know who you are, what you do, and what part of the world you are in. You want to unmute yourself. Maybe perhaps maybe once I call your name, just unmute yourself and please just do a brief intro. So let's start with Mr. Oluwashino.
Okay, good morning, everyone.
Morning.
My name is Oluwashino Mukandasi. I'm in Nigeria. I work with the civil service, Lagos State Civil Service.
Okay, brilliant. You're welcome, Mr. Oluwashino, Lagos.
Thank you very much. Thank you very much.
Mr. Akin Adish.
Good morning, everyone. Good to be here. My name is Akin Adesokun, and I'm an entrepreneur. I'm plugged in from Lagos.
Okay, thank you so much, sir. You're welcome.
Yes, sir.
Okay, so I think just before I invite Mr. Facilitator, okay. Let me introduce myself. I'm Adeleke David. I am CEO of CulverTrust. I'm speaking right here from Lagos myself. I think it's a pleasure to be here. I'm an entrepreneur, management consultant, and a crypto enthusiast and investor. Thank you. Okay, let's just get on with it. Mr. Masashinobi, please. Introduction.
Hi, everyone. My name is Additional Denujadele. I'm mostly into construction, but I'm also a crypto early adopter and investor as well. Yeah, that's
Thank you so much, sir.
Summary.
You're welcome, sir. Use many things in one. Okay, sport enthusiast too. Okay. So let's get on with it. Yep. So let me just highlight how I found my way into cryptos, how I saw the crypto light. My story dates back to 2016 when a very dear friend of mine spoke to me about Bitcoin. He talked to me about blockchain, and he went on and on about the possibilities of blockchain technology and what's achievable with it. You know, he said so much about how blockchain could be used for database management, for national identity management, you know. And as a management consultant, I kept thinking to myself, okay, how can I apply it to, you know, consulting as a business? But I couldn't really see the light, you know. And he spoke about Bitcoin. At the time, there was this multi-level marketing system wrapped around, you know, crypto. And, you know, so I was supposed to refer about 3 people or 7 people or something like that. And then when each of them registers, I will get a little bit of Bitcoin, and that Bitcoin that I get will be about 7,000 naira, within a space of 2 weeks or something. I mean, it sounded nice, but I was done with anything multi-level marketing at that time of my life because I had just been, burnt hard by and disappointed by some of those that I had been involved with. So anything crypto, anything multi-level marketing was out of it. And because crypto came to me from that angle, it was a no-go area for me. So I just shut it out. But then I tried to give it a bit of thought. I mean, how can you create a currency out of thin air? Like there's nothing tangible, nothing physical. Like it's a bubble. If something happens tomorrow, who are you going to hold? Who are you going to appeal? Who are you going to report to? And because there was limited knowledge and information all that time, I just said, okay, that's for now. I'll think about it. But hey, the biggest hindrance that I had was the fear of losing anything that I put in or anything that I gained from it, because it was just digital. Perhaps someone somewhere is controlling it with a code, or someone can just hack it and it's gone. And that was the main reason why I said, hey, hell no to crypto, and I steered away. Fast forward to year 2020, NSAS came up, and during NSAS, I got thinking a lot. Okay, um, it's obvious how the country is. It's obvious the draconian policies that were, enshrined in the way things were being run. And for me, it was, um, a very strong, it's a very, very, very instructive season to say, come, you need to pay closer attention to this. And then I started to really think again about cryptos. I had heard about a number of cryptocurrencies, prior to that time, and none of them was really. I heard about a few ICOs. There was this one coin ICO then that I had of 100,000 naira, and then I would get about I did 1,000 coins or something. So the ICO was coming at 100 naira per coin or something like that. But I wasn't. But then last year, I just really started to think, okay, this crypto, let me take a look at it again. If after 4 years, it's still around, and I mean, I'm hearing that the values are increasing. And before I just looked around and I saw that, okay, man, this thing is looking reasonable. It's looking reasonable. And one of the things that fascinated me was within a few hours, about 1 or 2 hours, the price of BTC had jumped. That's Bitcoin. The price had jumped, and I was like, oh, wow. That means if I had put some money in like an hour ago, the value of my money will have increased. And so I just reasoned, okay, I mean, let's start off with something that perhaps I can afford to lose. Let's, let's stick it with, say, about 20K. So my very first investment in cryptos was 20,000 naira. So I split that 20,000 naira between Ripple, that's XRP, Ethereum, and Bitcoin. And I was in crypto. Fast forward to January 2021, I signed up for a training organized by our guest facilitator. And I think it was a day to that training that the CBN made the announcement, or 2 days to that training, the CBN made the announcement about banning cryptocurrency activities and shutting down bank accounts that had been involved with cryptocurrencies in the last 3 months or something. And I was like, what is going on? And I kid you not, my first probable response was to pull out and just forget everything, liquidate my money back from Luno, and just walk away. Because for me, that I had lost the fear of something bad happening for 4 years, and then I finally summoned the courage to step in. And here I was, the CBN was placing a ban, putting a hard foot down against cryptos. I mean, it was a strong moment of decision for me. But hey, I told myself, if I'm going to live beyond Nigeria, I'm going to need to defy this one. And so I defied it. I went in for the training, and bingo, that's how I got started. And here I am today. I've gone way miles ahead. I must say today, as I speak, my investments in crypto, after that 20,000, I've invested so much more. I've invested so much more. My investments have more than doubled. The recent bear markets, dropped the value by around 30%, but I am still in profits. That's very important. I am still in profit, regardless of what has happened with the market. I am still in profit. Not as much profit as I had last week, but I am still in profit, and that's the good part. So while some people are crying foul, oh, the cryptocurrency market has crashed. It did not crash. So if it crashed, all of us would be crying. But hey, it didn't crash. I'm still in profit. I'm happy to announce that. And I think that there's a huge window of opportunity in this current season that we're in that I think a lot of people can take advantage of as we're closing from this session. And I really hope that the things we're going to be sharing in this workshop will spark something in everyone that is attending, to see beyond the obvious. Always remember that much of what is circulating around is not the first-hand information that you should base your decisions on. I've learned to seek the right answers for myself. There are reasons why there's a crash or why there's a bear season in cryptos. But mind you, even the stock markets globally are affected. So it's not just crypto. It's not a function of cryptocurrencies. It is the entire financial system that is in trouble. And that includes stock. US stock market is in trouble. The Nigerian stock exchange is also in trouble. They closed in red. And the investors, the market cap has also dipped in the Nigerian stock market as it has in the United States stock exchange or stock market. And so I should say that there's huge opportunity in this time. Famous buy the dip that people have been shouting all over. Yes, buy the dip, but you should know why you are buying the dip and how to buy the dip. And I hope we'll be able to touch a little on that in the course of this class. So that's my story. It's been a very exciting experience so far for me. I'm happy about all of the people who have found light, walking into this space of cryptos and who have been able to make a little fortune, at least something they probably wouldn't have been able to make otherwise. And for many of us who are just stepping into the space, you're welcome. Some of us who are already in the space and are looking to deepen your knowledge and expand your perspective, you're also equally welcome. So there's this quote I have to share, just read out. It's very, very instructive for me. And it says, if you can film an idea in your mind, follow that film idea shot for shot, scene for scene. That idea is worth making. If you see possibilities in cryptocurrencies, I want to request and ask of you to go all out for it. Go all out for it. I see the days, personally, I see the days when my capital would have grown to about $5 million, where I can be a baby whale in the crypto market. I watch the way some whales move money. And just yesterday night, I was seeing, when I was checking whale activities, and I was seeing how, whales were moving as much as $500 and something million, $5 million, $45 million, $10 million, $15 million, worth of cryptos, moving them around. And I told myself, I'm getting there. I'm getting there. I started with 20,000 naira. That's in today's currency value. That's somewhere around maybe $40 or so. I mean, I'm going way beyond, what is obvious. And I can see it. And I'm also encouraging everyone here. If you can see it, please follow it shot for shot. And you're going to definitely hit the mark. All right. So at this point in time, I'll be inviting our guests, speaker, to take up the floor. Please, he's going to be speaking on understanding cryptocurrency and blockchain. Understanding cryptocurrency and blockchain. So please welcome with me, Mr. Additional Adeniji Adele. Thank you so much, Master Shinobi, as I popularly call him, for joining us this morning.
Hi, everyone. Good morning. Yes, it's still morning. We're just going to quickly break down what crypto is, at least the basics, so that people understand. The major issue that people find in getting problems in crypto is that, or they get into problems in crypto is that they do not understand what they are doing. They are just following the hype. And if you follow the hype, you would always find yourself in trouble. You need to understand. I believe anybody that is getting involved in any business should understand what it is they're getting themselves into, basically. So let's start. So the definition and fundamentals of crypto. So what is the blockchain? I want to quote, there's this long quote by Mark Andreessen, just be patient. The practical consequence of the blockchain is, for the first time, a way for one internet user to transfer a unique piece of digital property to another internet user, such that the transfer is guaranteed to be safe and secure. Everyone knows that the transfer has taken place, and nobody can challenge the legitimacy of the transfer. The consequences of this breakthrough are hard to overstate. So let's go to the definition. Blockchain technology is most simply defined as a decentralized distributed ledger that records the provenance of a digital asset. So basically, blockchain technology, sorry about that, simply defined as a decentralized distributed ledger that records that somebody has a digital asset or has issued that digital asset to another person. How does the blockchain work? Okay, so this is just a bit of a layman's way to break it down further. A blockchain is a type of diary or spreadsheet containing information about transactions. Each transaction generates a hash. We'll go into that a bit more. Each block refers to the previous block, and together, those blocks together, they make the blockchain. A blockchain is effective as it is spread over many computers, not just one computer, many computers, each of which have a copy of the blockchain. So you look at this illustration, you have 3 blocks, the green, yellow, and red blocks, and they're all connected in the middle with some kind of chain, just to show you that this is a blockchain. So if you now look at a block, a typical block, whether the yellow or the red or green or whatever, it contains data inside. Then it also has a hash, and it also has the hash of the previous block, the block that came before it. So the next slide, you would see the hash there, that thing written there is long code right there is the hash. So the hash is some kind of digital fingerprint. So definition, a hash is a function that converts an input of letters and numbers into an encrypted output of a fixed length. A hash is created using an algorithm and is essential to blockchain management in cryptocurrency. So let's look at the illustration again of the 3 blocks, but a bit more detailed. You can see the green, the yellow, and red. Now we have numbers on them, 1, 2, and 3. And in this scenario, the first block, 1, we'll call that the genesis block, which is usually the first block of every blockchain. So it doesn't have a previous hash. So the previous hash would always be 0. Then it has its own hash, which in this scenario is 1Z8F. Even though this is just basic, normally hashes are much longer. It's not something that you will probably be able to even store in memory, unless you're a genius, of course. Then block 2 has its own hash, which is 6BQ1. Then it also has the hash of the previous block, the 1Z8F that comes from block 1. Similar in block 3, it has its own hash, 3H4Q. And it also has the hash of the previous block, block 2, 6BQ1. So now when you go to the next, this is exactly how you understand that it's difficult to hack or tamper with the blockchain. Now, if in a scenario, somebody tries to tamper with block 2, with the information in block 2, because the hash is also an output of the information stored in block 2, the hash will change. And automatically on the blockchain, there'll be an error. Like if you look in this case, the 6BQ1 has changed to H62Y. But obviously there's an error because block 3 would look at it that, but the previous hash was 6BQ1. So it will be rejected by the blockchain that no, this is wrong. And it will be rejected. So that is a way that the blockchain secures itself. This is all just to show you how the blockchain works, how everything is linked and how it is secured. Now we're going to look about the distributed aspect of it. If you look at the illustration, there's diagram A, B, and C. A is in a centralized system. If you notice, all the nodes are protruding from the center. So there's a central control point or a central point of failure as well. So for instance, like our common banking system, they use centralized systems, be it your commercial bank or the CBN. There's maybe a central server somewhere, maybe at the HQ or a data center where all the information is stored. So if a hacker hacks that central server, all the different branches, all the ATM machines of that bank, they will automatically, how do I put it? They would follow because they are all getting their information from the central server. So if the central server is hacked, all the other ones are already compromised. Now in a decentralized system in like B, you can see that there are different nodes, different central points that are carrying the nodes to other nodes as well. But in what we have in the blockchain, which is in a bit of B and also part of C, is a distributed system as well, because it's not just all the nodes are carriers of the blockchain. So the blockchain itself is not supported by any one node or any group of all the nodes, all the computers, all the nodes, all the miners are all carrying the system. There are no miners that are not nodes. So this is a definition. Whenever a new block is added to the blockchain, every computer on the network updates its blockchain to reflect the chain. By spreading that information across the network rather than storing it in one central database, blockchain becomes more difficult to tamper with. Next one, we'll talk about consensus, which is what the jobs of what the nodes do or how the nodes agree that, yes, this thing is correct. You can see 1, 2, 3, 4, 5, and 6. Those are the different nodes. And if you see in the middle, there's a handshake, which signifies consensus, because all of them have to agree that, yes, this transaction or this new block on the blockchain is valid. So we'll talk about proof of work, which is the very first form of blockchain algorithm. We have other ones now, but let's just talk about proof of work for now. What is proof of work? Proof of work, or POW, is the original consensus algorithm in a blockchain network. In blockchain, this algorithm is used to confirm transactions and produce new blocks to the chain. With POW, miners compete against each other to complete transactions on the network and get rewarded. Proof of work is necessary for security, which prevents fraud, which enables trust. This security ensures that independent data processors or miners can't lie about a transaction. Proof of work is used to securely sequence Bitcoin's transaction history while increasing the difficulty of altering data over time. So the proof of work algorithm, the formula, over time, it becomes more and more complex. I'm going to talk about smart contracts. A smart contract is a computer program or a transactional protocol which is intended to automatically execute, control, or document legally relevant events and actions according to the terms of a contract or an agreement. Smart contracts are lines of code that are stored on a blockchain and automatically execute when predetermined terms and conditions are met. At the most basic level, they are programs that run as they've been set up to run by the people who develop them. For instance, a smart contract can have like, okay, at a certain time of the day, maybe every day by 7 p.m., it should execute this, and or at when this a particular level has been reached in terms of capacity on the blockchain, then it should do this. So a smart contract is just an added feature for blockchain technology, another layer that was added of technology. So here is this illustration about a smart contract. So one, it's an option contract between parties as written as code into the blockchain. The individuals involved are anonymous, but the contract is the public ledger. Or the contract is the public ledger. So basically, it enables you to do transactions with somebody in a secure way, and you cannot dispute it. Imagine that you want to buy land from Omonile or from a family, and it's created as a smart contract and it's on the blockchain. The moment they sell it to you, they can't go and sell it to anyone else because it's on the public ledger. Everybody can see it. And at the same time, it's secured in such a way that people know that it cannot be hacked. So you can have that kind of smart contract. Two, a triggering event like an expiration date and strike price is hit and the contract executes itself according to the coded terms. So you might not even need a node or a miner to do anything. Once those triggering events have been hit, it will automatically execute. Then three, regulators can use the blockchain to understand the activity in the market while maintaining the privacy of individual actors' positions. So it also helps you remain anonymous while doing business with people. You can buy shares, you can, like I said, buy property, buy art, buy precious things, and it can be monitored via the smart contracts that, oh, this is the activity going on, but they don't need to necessarily know who you are and maintain your privacy, which is one of the major advantages of blockchain, personal privacy. Nobody really wants people prying into their finances that much, but I guess here in Africa, it's a bit different. So now we're going to talk about cryptocurrency itself. So what is cryptocurrency? We'll start about talking about what is money, the concept of money. This is something that many people didn't teach, many people were not taught, but money is just really not paper or notes. Those are just representations. Money is actually its value. So whatever you have as value, you use it to exchange for something from someone else. So that but over time, things have changed. That's why we have paper notes and stuff now. So what is money? Um, it's the current medium of exchange in the form of coins and banknotes, or coins and banknotes collectively. This is the dictionary definition. Money is any item or verifiable record that is generally accepted as payment for goods and services and repayment of debts, such as taxes in a particular country or social economic context. So we're going to look at the evolution of money. So we'll look at how the whole thing started, the barter system, something I was trying to illustrate. So in the barter system, some people will have corn, somebody will have maybe a cow, and maybe I want to exchange my cow for corn, and you tell me that, oh, for the corn that I want with that cow, you have to give me maybe like 500 pieces of corn. But I only need 100 pieces of corn. Those are where challenges started to come up, like, oh, will I now cut off one leg of my cow just to get this amount of corn? Because it doesn't make sense. Obviously, once you cut it off, the animal is dead. So there were challenges. So then they now had to have other things of value that people agreed or viewed as valuable, like gold, the second evolution, gold, and other precious metals, maybe like silver and stuff, because they saw that everybody agreed that, oh, this shiny metal that we found in the ground, it's not that easy to get, and it's precious, it's beautiful, so that thing gained value. So you could now use that to exchange with other people who saw the value in this thing for food and items and stuff. Then we'll now enter the third level, which is metal coins. This is when we now started having government involvement. Government in terms of people coming together and saying, you know what, we have this authority or central authority, and they would mint coins. And these coins that they are minting, yes, these coins that they are minting, we all agree that, okay, this one that they put maybe one on it is the valuable of maybe 1 dinar. Or and this one that they put maybe 10 on it is the value of 10 shekels or something. But this was how, because the government says, okay, we back this thing, and they would be like, okay, yes, we accept this in exchange for our value, and we can also use it to exchange for value in other places. And that is the same concept that we have in paper money. Rather than having to mint coins, started minting paper, and so on and so forth. Then we now started going into plastic cards, which was a bit safer because there were security features so that people won't steal your money from you, because cash and coins, they can easily rob you of them, but your card added layer of security, and you don't have to carry so much around. Then obviously electronic money, which is what everybody has nowadays, your online banking, iBank, apps, all those things. Then obviously now the new age, which is crypto. Even though adoption is still very low, but I still see like in another 100 years that the world will probably be 100% based on crypto. So what is a cryptocurrency? A cryptocurrency is a digital or virtual currency that is secured by cryptography, which makes it nearly impossible to counterfeit or double spend. You can't double spend because obviously it's on the blockchain. Nobody can alter that hash and add that block again. It's not possible. Many cryptocurrencies are decentralized networks based on blockchain technology. Okay, so many, because there are a few that are quite centralized. There are a few, like I'm sure you guys heard about China starting their own currency. It's quite centralized. It's not decentralized. All the nodes that are holding it up are their nodes. They will run everything. The government runs everything. A distributed ledger enforced by a disparate network of computers. Yes, that's what a decentralized network usually is. But usually nowadays, I think some of governments are now thinking about centralized ways of having their own cryptocurrency. But an XRP2 is quite centralized, but there are challenges with having centralized currencies. It's not really it's not really giving power back to the people. It's just government trying to get in on the business as well. A defining feature of cryptocurrencies is that they are generally not issued by any central authority, rendering them theoretically immune to government interference or manipulation. So yeah, crypto normally should protect you from government manipulation, protect you generally from things like inflation, because most cryptos are deflationary anyway. And government can't just be minting new coins. In fact, most cryptos that even mint new coins have, it's already built into the system. It's not about some central authority waking up one day and saying, oh, we want to print more coins. No, it doesn't work like that. So theoretically, it's supposed to be immune from government interference. So obviously the new currencies, that's why the ones run by governments are called virtual currencies. They're not really cryptocurrencies. but they have some form of blockchain backing them up. Basically, they are essentially entries into a database that you cannot change without fulfilling specific conditions. Cryptocurrencies are a medium for exchanging value, but are created and stored electronically on the blockchain. Characteristics of crypto. All transactions are made over the internet. There is no centralized authority. Users are allowed to be anonymous or pseudo-anonymous. Yeah, I'll explain this later. Supply of coins must be added in a controlled way or capped at a certain mining supply. They are secure online ledgers based on cryptography. They contain details of balances and transactions, are decentralized and distributed. They make all transactions and balances publicly visible. They contain no personal data of users. And they're mostly based on open source code, e.g. Bitcoin, Litecoin, Ethereum, and many, many more. They are mostly open source. No one can question, reverse, or block transactions, and no one can charge you exorbitant fees. And last of all, you are your own bank and you're responsible for your own private keys. So let me just go back to the pseudo-anonymous/anonymous part. When you own crypto, on the blockchain, they don't know who you are, they don't know what your name is, but your what you have in your wallet is visible to anybody. But if they just don't know who owns the wallet, so that's why it's pseudo anonymous. You can see where money is flowing from. Like Leke earlier said, he was watching how whales were moving money across the whole ecosystem, 500 million, 800 million, 1 billion. Whales move a lot of money, and you can see the activity. It's clear. Even recently, the Feminist Coalition and when people were asking them to account for monies that they saw, the transactions they saw based on their Bitcoin donations, because everyone can see the movement of the coins into the wallet and out. But because Feminist Co had already made it available to the public that they are the owners, that's why people could tell that it was Feminist Coalition. But ideally, if you don't reveal who you are, nobody will ever know that this is your what you call it, your wallet. And your wallet is usually backed by your private keys and your public keys as well. So that's why in the last line, you say, no one, you are your own bank and you're responsible for your own private keys. You don't let your private keys out. So in summary, transactions are irreversible. You are pseudo-anonymous, faster rate of transactions. It's a very secure cryptography system, and cryptos are permissionless. So, like next slide, please. Okay, sorry. Cryptos are permissionless, so you don't need anyone's permission to get into crypto. You don't need anyone asking you questions that, oh, why are you putting your money here? So it's still another form of financial freedom. Other applications of blockchain, we'll just quickly touch on that. We'll first of all talk about the capabilities. So transactions or digital assets in a blockchain are permanent, immutable, and non-editable records that can be verified by all the nodes on the blockchain. And the purposes of this is to establish a digital identity, a system of record, a proof of immutable record, and serve as a platform for contracts and services. So there are a few applications like energy. We have Power Ledger, we have WePower. There are a few more energy-based blockchain systems that are rewarding people. They will take the excess power from your house and redistribute it to people who don't have power. And you can see how the power is being moved on the blockchain, and you're also getting paid back in crypto. Supply chain, Ambrosius, VeChain, yes. So these ones, you can track supply of it's mostly what you call it, perishables that VeChain does. So you can see the movement of maybe canned food or wine bottles from maybe South Africa all the way to your shop. You can see when it left when it left the what you call it, the factory or in South Africa to the port that it left, to the port that was received in Nigeria, to the what do you call it, the logistics person that moves it to the storehouse, the warehouse it was stored, the people that signed for it when it was moved to the supermarket. It can all be tracked on VChain. So that's very fantastic. Finance. This one is also very fantastic. DeFi, decentralized finance. You see a lot of things going on there, like loans, investment. I'll really let Leke go in depth into that, because Leke is the one that does a lot of staking and farming, so he can even explain a lot more about that to you in terms of the financial applications. Then of course, Ripple, which is XRP, they also do their own. What they are into is not DeFi; it's more of transfers, international remittances. So
It's Senfi. It's more of Senfi.
Yes. So
I think.
They do a lot of international remittances, funds transfers, international funds transfers. So I know they were partnering with MoneyGram for a while. I'm not sure if the agreement has ended or not. But MoneyGram used to use Ripple as the background for transferring money across countries. So when you're sending money from Nigeria to the UK or from UK to Nigeria with MoneyGram, at one point they were using Ripple to do that. And real estate, and there's Atlant, and I think there are a lot of people going into this real estate application now. So if you can't afford to buy maybe a house in Dubai, maybe with your small money, you can afford to buy a share of a house in Dubai, because that's how power of the blockchain. It's you don't even need to know the other people that you joint money to buy the house with. All you know is that you own a share of a house, and they are getting your returns, they're getting your payments for your stake. For your share in the
Deployed
house.
in
So you don't need to
Nigeria,
know anybody, the
you
whole
know.
system. It can be deployed. I'm actually looking at that. I've been discussing with a few people. But the major issues are legislation. I think there's a law in Nigeria that doesn't really allow private entities to generate power. Well, I think they cap the amount of power they can deal with, or something. They just have some challenges. I've been discussing with a common friend of ours, Moses Nasamo. So there are challenges, but the major challenges are legislative. If they can be sorted out, then obviously there'll be avenues for these things to work.
Then in terms of real estate, I mean, I think real estate is a lower hanging fruit, you know, but the question will be like the blockchain features of it. The lands are there. There are lots of people who want to buy land, but they don't have 8 million to go and buy land in Lekki, you know. But you know, I'm just trying to think aloud. Are there platforms that can be deployed without one necessarily building the blockchain or the smart contract for that? You know, where there are existing firms, companies that already have that system, and then you can just maybe subscribe to it, and then you can get your crowdfunding on
here
it.
in Nigeria.
Yes, to do it here in Nigeria, to implement something like what Atlant is doing.
The challenges here in Nigeria is they are mostly mental, and we really haven't gotten to mass adoption yet in Nigeria. Obviously, lots of Nigerians are in the crypto space, yes, but most of the Nigerians are into crypto are just trading. They don't, they're not really about the applications part as much. So even convincing people, it will take a while for you to convince people that they can get paid in crypto for investing in property. It will take a while. I know in Dubai it's selling in Dubai. Yes, it's quite popular in Dubai. I think it will be easier for you to be getting foreign investors via a blockchain system, but also there might be legislative problems here when they ask you where are the finances coming from for the property that you're doing here, and you now have to explain that it's crypto, and maybe they now look at it that, oh, you're selling securities. You know, it's funny. So I think we have a lot to do in Nigeria in terms of getting to that mass adoption phase. Most of these things beyond the supply chain, there'll be many challenges. There'll be a few hurdles to be, because I don't see the Nigerian government being pro any of these other things. No government wants to lose control. Let's talk about Bitcoin. Bitcoin is the first cryptocurrency. So what is a Bitcoin, or what is Bitcoin? Bitcoin is a digital currency created in January 2009, following the housing market crash. It follows the idea set out in a white paper by the mysterious and pseudonymous Satoshi Nakamoto. Nobody knows who this is. We don't know whether it's a man, a woman, or 10 people, 5 people, 100 people. The identity of the person or persons who created the technology is still a mystery. Bitcoin offers the promise of lower transaction fees than traditional online payment mechanisms and is operated by a decentralized authority, unlike government-issued currencies. There are no physical Bitcoins. Only balance is kept on a public ledger that everyone has transparent access to. So basically, most of the money we even have now is not really physical anymore. It's digital, but it's just controlled by a central authority. But Bitcoin, for instance, is with all Bitcoin transactions is verified by a massive amount of computing power. This is where the thought comes that Bitcoin mining is not good for the environment, because you need a lot of computing power, and a lot of that generates a lot of heat, and maybe you need a lot of power to even power that system. So many people say that's not good for the environment, but most major mining operations are, I think they are green. They are usually built around spaces that actually make sure that they're not impacting the environment negatively. And yeah, I haven't seen anything that would really be impacting our environment and in any serious capacity. Bitcoins are not issued or backed by any.
Sorry, sir, just a moment, just a moment. I think even studies have recently shown that banks consume more energy than Bitcoin mining. And I think it's just a sentimental, a sentimental thing that is being promoted, because it's shown with evidence that 75% of Bitcoin miners use renewable energy. But we cannot say that 30% of banks across the world use renewable energy, especially not even in Nigeria, because they have to get license from La Cepa, and then to store oil on their premises and all of those things. But if banks have not been doing any good to the environment, and they are, yeah.
Yeah, so to even buttress what you said, most Bitcoin, because of the amount of power required to run a sensible mining operation, you're not going to be paying from the grid, because you'll be paying, you'll be making, you have to be even getting extra money to pay, because you won't be making anything from your mining operation, because all the money plus extra will be going to bills. So most people actually have to use renewables. So it's so yes, I agree with you. Yes, most people use renewables, because you can't be, if you can't even with the current Nigeria PHN charges, I visit Transmission Company of Nigeria charges. You're not going to want to run a mining operation here in Nigeria of any significant level, because the bills you'll be paying will be unrealistic. You won't be able to afford it, and you wouldn't make as much even from it. So it wouldn't make any sense. Yeah. There are about there's a limited supply of Bitcoin, 21 million Bitcoins. So That's the supply limit. It's not. There's no more than that in the whole world. That's why many people don't. Many people own fractions of Bitcoins. We talk about Ethereum. Ethereum is a decentralized open source blockchain featuring smart contract functionality and was launched in 2015. So smart contracts started with Ethereum. Another thing that people call Ethereum is that the world computer, because smart contracts also enable the support of decentralized application. So you have applications that are spread across the the blockchain, and because of that lack of central points of failure, the apps will never fail because of some server error, because the whole system is carrying it up. Ether is the native cryptocurrency of the platform. It is the second largest cryptocurrency by market capitalization after Bitcoin. Ethereum is the most actively used blockchain. Yeah, because of the smart contracts. Yeah, so that's why people use a lot of Ethereum. Most D apps are built on it. In fact, many people also build other applications, DeFi projects on the Ethereum smart chain. We'll talk about altcoins. Basically, an altcoin is any alternative digital currency to Bitcoin, because Bitcoin is the first. An altcoin is any coin, any cryptocurrency coin that is not Bitcoin. Basically, when you hear somebody say altcoin, it's just any coin that is not Bitcoin. The word altcoin is a portmanteau of alternative and coin to form altcoin. It actually refers to a group of cryptocurrencies, ultimately all the cryptocurrencies other than Bitcoin. Examples like Coin, Ether, Monero, Dogecoin, Dash, Polkadot. The list is actually endless. Decentralized finance, DeFi, okay. This is a blockchain-based form of finance that does not rely on central financial intermediaries, such as brokerages, exchanges, or banks to offer traditional financial instruments, and instead utilizes smart contracts on blockchains, the most common being Ethereum. So yes, there are other smart contract blockchains, but Ethereum is the first and is the most popular. You would find out a lot about other ones. So we look at this illustration, you can see the traditional financial system, where this could be central bank in the middle and all the other banks on the side, or this whole system could be, for instance, Union Bank. The middle will be their central points, maybe their data server or their headquarters, and all those other ones are the branches. So if you ever have an issue with the central point, all the other branches will be having problems. That's why when you go to a bank and they say, oh, their server is down, you can't do anything with that bank. And so their server comes up. But in decentralized financial system, like we spoke about a distributed system, you can see that there's no central point. All the computers are carrying the blockchain. All the computers have the information. So at any point in time, the system is up, doesn't have downtime issues. So we look at the next illustration. So these are the characteristics of DeFi. It's permissionless, it's decentralized, it's trustless, it's transparent, it's censorship resistant, it's programmable.
Please, can we just explain this permissionlessness? Oh, okay, our facilitator seems to be okay. Stay here. So I'd like you to, Mr. Shino, I'd like you to please explain this permissionlessness. What it is. Just because the terminologies sounds strange, perhaps to most people.
It doesn't require any permission from anyone. Basically, that's what permissionless means. It doesn't require you to go and fill a form and sign for them to allow you to do something. Basically, it doesn't require permission. It doesn't require you to go through hurdles or go and provide information. Please, can you hold on?
Okay, please.
I'm having just a slight technical challenge. Just give me about 3 minutes, please.
All right, sir.
Hello, Leke. So I'm back, but my video may not be available anymore. I hope you bear with me.
It's okay. That's fine.
Okay, so yeah, so DeFi basically these are financial services with no central authority. It involves taking traditional elements of the financial system and replacing the middlemen with a smart contract. So the middlemen are the people you normally have to get the permission from. I hope this clears it up for you, Leke. So rather than have middlemen be the mediators, you have a smart contract that doesn't, because if it's a middleman can choose like your face, might not give you a loan, or he can give a loan. You meet the criteria automatically when you want to stake. Nobody's going to ask you to bring any information. You put in the coins you want to put into the stake pool, and you'll be receiving your interest. Or if you want to take a crypto loan, you can put some of your digital assets down as your collateral without them knowing who you are. It's the value of your collateral that they would use to give you the loan that you need or you desire. So we're going to talk about so, okay, let me just finish that up. We can also describe it as the merger between traditional banking services with blockchain technology in layman's terms. Terminologies in cryptocurrency ecosystem address, let me just say all of them first, then we'll touch on each one after the other. Address, alpha, altcoin, arbitrage, ATH. Okay, let me just even explain each one. So an address is basically your wallet address, whether your crypto wallet address, be it Bitcoin, Ethereum. Every cryptocurrency has an address, or every cryptocurrency wallet has an address. So it's a representation of your public key. You can generate one each every time you want to receive coins. So that address is what it's like the equivalent of your bank account number. The only difference is that the address it's dynamic. You can keep changing, or you can use the same one, and it's based on cryptography as well. Alpha basically is hot information. When you have like hot news or hot fundamental news, or about, or even maybe even it could even be technical analysis. Maybe you notice something that nobody has noticed that could like premium information in the market. That's what you call alpha. Altcoin, okay, we've touched altcoin, any coin that is not Bitcoin. Arbitrage. Arbitrage is that's Leke's what do you call it? Well, Leke used to make a lot of money from. Leke is the arbitrage master here. Arbitrage is like maybe you're seeing maybe For example, let's just give a name, Woodcoin. Maybe Woodcoin costs $100 on Binance, and on maybe, for instance, Luno, it costs $150. So someone like Leke will move his Woodcoin from his Binance to his Luno and sell it for gains. So that's it. Yes. It's
Sorry,
all time.
speaking of that arbitrage, just yesterday I noticed that the price of VRA on Probit is higher than the regular market price on KuCoin. And so I just reasoned like, okay, this one here is 0.019, and then on the other side is like 0.015. That's about 0.004 difference. So I'm like, okay, I can sell my Probit, my VRA on Probit for a higher price as it is, and then convert it to Tron, move it to KuCoin, buy lower, or buy and then buy lower from there, and I'll have had a bit of extra on my value. I just think it's sense.
Yeah.
I don't know.
Yeah. Then ATH is all-time high. ATH is the highest price a coin has been since it came into existence. So the ATH of Bitcoin is just over 60,000 US dollars. And I think the one for Ethereum is somewhere above 4,000, maybe about 4,003 or thereabouts. So that's what ATH is. When you ever hear ATH or all-time high, that's the highest price that coin has been. Bear or bearish? A bear period is when most people are selling. Period when there's a dip in the market, when the general trend is that people are trying to sell off their coins. It's based the market operates based on prices are based on demand and supply. So when there's plenty of supply, demand is lower, and obviously once there's abundance in the market, the price will go down. When there's a drought, when there's lack of supply and lots of people want that coin but there isn't enough, obviously the price will go up. So generally a bearish period is when there's a plenty of supply and not enough demand, so the price will definitely go down. The opposite of bear or bearish is bull or bullish. So that's when you hear about bear markets or bear season or bearish movements. This is where it comes from. Blocks, we've already spoken about blocks. So those are each transaction on the blockchain. And we already know what a blockchain is. Bull or bullish, like I said, the opposite of bear or bearish. Whenever there is scarcity of and the market, and there's a lot of demand in the market needs it, then the price will go up. That's a bullish need the coin around. So that's consensus. We've spoken about consensus. So this is the algorithm that confirms new blocks on every blockchain. Whatever blockchain, usually most blockchains have consensus algorithms. So cryptocurrency, we've spoken about that. Cryptography. So cryptography is basically high level of coding to code things, but in the cases of blockchain, it's for the hashes that are produced by each block. The digital fingerprints are all based on cryptography. DDoS attack. This is distributed denial of service. It's a hacking attack when they try and overflow a server to the point that it crashes, I believe, yes, or something like that, so that they can go in and steal people's coins. But DDoS attacks usually do not happen on the blockchain. They usually happen on exchanges. So when you hear that, oh, one crypto has been hacked, it's not the blockchain that was hacked. Maybe an exchange. Maybe somebody hacked Probit or hacked Coinbase or hacked Kraken or hacked maybe Binance. Then that would be what that would be. A distributed ledger, we've spoken about what a distributed ledger is, a ledger that is distributed across different nodes, so everybody has a copy. Escrow. Escrow means somebody is there standing in between to secure the transaction, because like we said, crypto transactions are irreversible. Once you send it to a particular address, you can't get it back. So some people have started creating escrow services in which they will add that extra layer of trust. You have your coins, you want to give somebody that you don't know from Adam your coins. This escrow will hold the coins. And once that person has fulfilled the conditions with you, you can tell the escrow to release the coins to the person. So the escrow is basically a go-between. Fiat currencies, these are our typical currencies like the naira, the dollar, the pound, the euro, the yuan, the yen, the dirham. So the basic ones that are backed by governments, those are what you call fiat currencies. Exchange is anywhere that you can exchange crypto or crypto for fiat. So at least in this sense, so that's what an exchange is. Obviously, you can also have an exchange for fiat to fiat, but for the sake of crypto, we're talking about fiat to crypto, crypto to fiat, crypto to crypto. FOMO. FOMO is fear of missing out. This is usually what brings many people into crypto when they hear that this thing is going up, when people don't want to miss out, that, oh, this thing is rising, but you need to manage your FOMO. Everybody needs to manage their FOMO. Everybody needs to trade wisely. You don't just run after every pump, because if the pump doesn't have fundamentals, you're going to find yourself in hot soup. So FOMO is something that you need to be aware of. It and because it leads to greed as well. So you need to always be careful to manage your FOMO and know that you're not just chasing after castles in the sky. A fork. A fork is what you call a when there's a fundamental change to how a coin or the what you call it, the way a coin operates, like the way Litecoin forked from Bitcoin. When some people thought that, oh, this problem that Bitcoin has, we have a better solution, because most of the codes anyway are open source. Some people can take that code, tweak it, change it, and from there create their own coin, which will be called a fork from the main coin. FUD, FUD. FUD is fear, uncertainty, and doubt. FUD is usually when people are afraid to buy or to get involved in crypto, or they want to start selling off all their assets. There's usually FUD news. As a matter of fact, right now we're having a lot of FUD news in the media, where lots of people are selling off their coins based on news they're just hearing. And obviously the conventional financial institution based media, they are all for FUD. Anything that will make the crypto market go down so that they can shake everybody out and buy the coins. But we know about FUD. It's not new. JP Morgan many years ago said that crypto is bad for the markets, and less than 2 years later, JP Morgan bought billions of dollars worth of crypto. So we've seen this thing and we know how this thing plays out. FUD is just usually how people who do not really, FUD and FOMO generally are for, I think they affect mostly people who are new in the market, who don't really understand what they're doing. So when they just say, this coin is pumping, should I buy it? And they buy it because they don't want to miss out of that thing. And when they hear, this coin is dumping, before I lose all my money, let me sell. Yeah, so it's usually these things are not triggered by any form of fundamental analysis or thought or anything calculated. It's just based on emotions. A hard fork. A hard fork is basically a fork that is very, very expansive. When it's like a complete change or a complete overhaul, like, no, we're doing this coin completely different from the way you guys started it. That's what you call a hard fork from the original. HODL or HODL. Initially, it's now called Hold On for Dear Life. So, but originally, HODL was somebody who was trying to tell, who typed, I think on Twitter, how maybe hold your coins, and it he misspelled and wrote HODL your coins. So HODL is just a crypto term for hold letting go. An initial coin offering or ICO. This is usually when this is how usually new coins are sold most of the time. So an ICO is the equivalent of what we have as an IPO for shares. When they release the IPO, they bring out the paper. This is the project or this business is going to do, and a shareholder or potential ICO, because you buy less represents your project. KYC, I think KYC, most people know what KYC is. This is usually the documents you have to submit for verification, your verification documents, basically. But most exchanges that ask you for KYC, but generally crypto itself doesn't need your KYCs. If you're trying to get on maybe an exchange like Binance or Luno, then they need to know who you are, that you're using the application, but that has nothing to do with the crypto system itself. So these are all layers of protection, and maybe to give people more trust in the system, because for someone like myself who got into crypto as far back as 2014, back then, no KYC, nobody's asking you questions. There was no I don't think there was a Binance. I don't think there was a Binance at the time. So we just used regular wallets to exchange, and that was it. Nobody needed to know who you are. You accept coins, you send coins, and that was it. Long position, a long position. I think this is when somebody believes that a coin is going to go up, I believe. Yeah, so a long position is when somebody believes that a coin is going to go up. The opposite is a short, when I think the person believes the coin is going to go down. So when they say you're longing something, that means that's your belief that it's going to go up. Market cap, that's the market capitalization, which is basically the worth of that project in fiat terms, or mostly in dollar terms. If you say the market capitalization of maybe like a Bitcoin or whatever is maybe so $1 billion, then that's the market cap. That is the worth of all the Bitcoins in the world, which is the worth of that project. Mining is that's how what do you call it? That's how nodes or computers confirm transactions, by doing proof of work or doing consensus algorithms. Whatever the consensus algorithm is, that is what the miners will be doing. One second. Mining incentive. This is the reward that miners get for confirming transactions and mining them into blocks. Verifying the transactions of the Bitcoin network, for example, requires specialized hardware and substantial electricity. So miners are compensated with a mining incentive. So because they know that for you to mine, it takes a lot of computing power and energy, you have to be paid. So they act more or less like maybe those are the transaction fees that you have to pay to move money around. It's the miner's fees for the person that is making sure that your transaction is confirmed. I think initially the Bitcoin mining incentive was 50 BTC, but recently I think it had dropped about 12.5 BTC. That's the mining incentive. That's for one Bitcoin, not every amount, but for one Then moon or mooning, I need to reconfirm that, but the mining incentive is basically what miners are paid for their mining works. Moon or mooning, this is when a digital asset rises sharply, when it goes up, or when they say it's going parabolic, when it's going up. So it said it's called mooning, it's going up because it's like it's moving towards the moon or it's moving towards the sky. So they say it's mooning. That's why you hear lots of people say on that to the moon, and they put up spaceship emojis and moon emojis because that means the coin is going up parabolically. Okay, a noob. A noob is a newcomer. Well, industry, when you know the way it is when you're in university and they call somebody a jambite or a jambito in university in Nigeria, if you went to university in Nigeria, a jambite in a jambito in university is the equivalent of a noob in crypto. So that guy is a noob. He's new to the game. He doesn't know what's up. So right now we have plenty noobs. Many of the noobs are crying right now because they've lost a lot of money. But you have to pay school fees in order to learn. Amen. So what they say is that if you are this person, this advice, if you are this person, you may want to sit back and observe before jumping in with both feet. Digital currencies are highly volatile, so those who are new to these assets should keep their risky nature in mind. So all the noobs out there, don't just FOMO in. Do your own research. This is very important. Do your own research. That's when I left out DYOR. Do your own research. It's very important that if you want to make money in crypto, that you actually go out of your way, go online, visit Investopedia, visit, even check on Twitter, try and find out information, check CoinGecko, check CoinMarketCap, find out about a coin, find out who the team is, who's running this coin, so that you don't go and buy yourself a coin, what we also call a shit coin, that is going to leave you wrecked. You would lose money. You just put money in it, and the money, what you see inside it, you will never be able to even take it out because it's worthless. POW, okay, we've spoken about that. That's proof of work, which is a system of proving that the digital currencies transactions have been verified. So many digital currencies use proof of work. Of course, like I said, Bitcoin, also Litecoin also uses proof of work. TRX, Tron also uses proof of work. There are a few, I think Zcash also uses proof of work. So there are a few that use proof of work. Then POS, proof of stake. This is another method of confirming transactions, but the difference is that it has a what do you call it, smart contracts tied into it. So digital currencies that use this approach to verification frequently provide all their digital tokens upfront, and miners are selected based on how many units they have. They are stake. In these cases, users who confirm transactions, sometimes referred to as forgers, receive transaction fees for their contribution. Private key. A private key, this is a piece of information presented as a string of numbers and letters that an investor can use to access their digital currency. So basically, your private key is like is the way you can access your assets on the blockchain. With your private key, you can transfer value in or out of your wallet. So if you ever have a chance to see your private key, do not share it with anyone. To actually find your private key, it's not that straightforward, but if you find it or you eventually check it, please do not share it with anyone. The moment you share your private key, you are compromised. Now, the other one is your public key, which is basically your wallet address. So this is how people can also send you cash, and it's also a combination of numbers and letters. Pump and dump. A pump and dump. This is a type of investment scheme where a market participant, maybe a whale or a group of people that have a lot of cash or money in crypto, now look for maybe a small cap project, and they just try and pump it up because they have enough money to buy a lot of volume and push the price up. so that many people will now want to go into it. And once you get into it, they'll most likely sell and dump all the prices, and it's you people that will be left, whoever follows them in, that will be left holding the bag. So they'll eventually eat your money. Imagine going in, you see a coin that is worth $5, going all the way to about $15 in the space of 5 minutes. I quickly see times three in the space of 5 minutes. You now go and jump in. You don't know that it's market manipulation. You jump in and you see it going up to 16, 17. You see it's about to hit 20. And before it hits 20, it goes all the way down to $2. And they sell everything because they've made their target. And the target is the people who didn't know what they were doing and went and jumped in on a pump and dump scheme. So avoid pump and dump schemes. REKT, which is wrecked. Basically, wrecked means wrecked, like WRECKED. Wrecked, this is when you lose a lot of money. You lose a lot of money in crypto. That's when they say you're wrecked. When you lose money that will pain you, that's what you call being wrecked. ROI, I think anybody who invests knows what ROI is, return on investment. Basically, how much you've made after putting money in. Satoshi Nakamoto, we've already said it. This is whoever started Bitcoin or started this whole crypto business. We don't know whether it's one person or a group of people. Short or shorting, like I said, this is a full shorting an asset, also known as taking a short position, means making a bet that the asset will fall in value. Like I said, when you're believing that, oh, this thing is going to drop. Okay, yeah, so shorting and longing are usually used in leverage and leverage trading and margin trading. So usually that's where you find such things. Investors who who want to go into leverage should also know that because of the volatile nature, it's also very, very dangerous. So usually I don't encourage people to trade with leverage. Basically a token is a coin. Any digital asset is basically a token. So any coin in the market, the Bitcoin is a token, Ethereum is a token, any digital currency is a token. A whale. So a whale is anybody, a trader or investor that has a sizable amount of an asset. So they have enough to move the ocean, the way a whale can make big waves happen just by moving. So that's why I call waves. Call them whales because they have the ability to move the market heavily because of the amount of assets they own. White paper, which is something that I think everybody should read. To be honest, when I got into crypto the first time, I didn't even know what crypto was. I didn't even know what blockchain was. All I just knew was that there was a way to move some digital money from point A to point B. I made a lot of money and I lost a lot of money very quickly too. Decided to actually take out time and learn and understand what this thing it is that I'm doing, and eventually I got better at it. I'm not the best yet, but without a doubt, I've made a lot much more than I did in the past. The white paper, this is what the developers of every digital currency or project that backs the currency, it's like a document they create in order for you to understand what that project is about or what that coin is meant to do. So the developers who create digital currencies usually provide white papers for these innovative assets. These documents generally offer comprehensive greatly from reviewing any available white papers on the subject. Like I said, if you want to buy an ICO, you need to do your research, read the white paper, find out about the team, understand the project before just putting money in, because it's solid projects that stand the test of time. Projects that are just all air or they don't make sense, or even if it's just not a project, it's just hype, it probably wouldn't last the test of, or it wouldn't stand the test of time. So thank you. That's my submission. Okay.
Okay, thank you so much. I think you missed out on shield.
Oh, shield. Okay, shilling. Sorry, shilling. Sorry, shilling is when you give somebody a tip. A shield is basically a tip in the crypto market. A tip is a shield. So that's what shilling is. When I tip you that, oh, buy VRA, I'm shilling you VRA. I'm tipping you about VRA. I'm shilling you ADA. Oh, buy Cardano. I'm shilling you Cardano. I'm giving you a tip that's a good coin to buy. Or I tell you that, oh, maybe the price of let's say for instance, MSwap is undervalued. You should consider getting in at this entry point and selling at this point. That's also a shield. It's just a tip, regardless of whether it's a buying tip or a selling tip or an exit and entry or an entry and exit strategy. Once I'm giving you a tip in the crypto space, it's called shilling. Yeah, so that's my. Is there anything else I left out, Leke?
I don't think so. I think you're just good. Thank you so much, sir. Please, thank you so much, everyone. I guess it's been very insightful. Mr. Shino is my oga. That's the person that I owe a lot of my strides in the crypto space to. I don't know. He just took interest in me about that last year, November, December, and then he kept pulling everything out. And for some reason, I trusted his judgment because I could see that he was quite knowledgeable about these things. And I said, hey, okay, I'm going to go in on his integrity. If he's into, then I'm in. And I've met some of the leading people in the crypto industry in Nigeria through him as well. Thank you, Mr. Shino, for honoring us today. We so appreciate you for taking the time out and sharing your wealth of knowledge and experience with us. Okay, thank you. So we move to the next module, which is investing in cryptocurrencies. And I'm going to be, I'll be facilitating this particular module. So just ride with me, just give me a moment. Okay, I'm back. Fine. So let's get into this. We should be able to tidy this up in another 40 minutes or so. So quickly, let's talk about wallets, public and private keys. Of course, severally, Master Shinobi has said a few things about public and private keys and the place of wallet as well. And I believe I'll just do a bit more. So he has touched the major parts of it. I'll just say a bit more about it. Okay, so a cryptocurrency wallet, also known as a Bitcoin wallet or crypto wallet, functions like a traditional wallet. And of course, what to do with a wallet is to put money inside it. So instead of paper currency, in this case, it holds proof of your digital cash. So whether it's Bitcoin. Now, some wallets have specific cryptos that they support. For example, Vera wallet supports VRA. Atomic wallet supports all kinds of those. Tron wallet, I think Tron wallet supports all kinds of cryptos too. Then Yoroi supports principally Cardano. IconX wallet supports only Icon ICX. So there are specific wallets. There are wallets that support specific cryptos, while there are others that support all kinds of cryptocurrencies. So most wallets allow you to stake your coins for profits. I understand why Mr. Shinobi said I do a lot of staking. Oh yes. Now you see, the beauty of staking is much like fixed deposits. So for me, because I took on a number of coins for the long term, and so rather than just holding them in the wallet just like that, they're just idle. where there's an option or the opportunity to stake those coins, I stake them, and then the value of the coin increases in terms of units, number of units. So I'll give an example. I wish I could share this on the screen. Okay, let me see if I can share from my phone. Let me okay, I can't. I may need to go and unbundle the settings all over. All right. Okay. What I was going to try to do was to show you, my wallet, my mobile wallet. Okay. Okay. Yes, I can. I can. Let me show you. Let me show you my Exodus wallet. In that case. Just a moment. Okay, I believe we can also see this. Yeah. Let me show you my Exodus wallet, just to show you a bit of what staking is wallet, and then there's an annual percentage yield that is paid out over the value of tokens that you hold, right? And so when you stake it like that, if, for example, you're staking about 100 tokens and the returns is about, let's say, 10%. That means that if you stake it for 1 year, you will get 10% of the value of your tokens. That is 10% of 100, which is 10. That means at the end of 1 year, your 100 tokens would have become 110 tokens. Okay, 110 tokens. But you see, those 10 tokens will be released, will be added over your coins, on a daily basis. Some on a daily basis, some on a monthly basis. So I'm trying to log into my Exodus wallet just to show you, staking for my Cosmos. Just a moment. So I have had my wallets increase in value, my tokens increase in value over time, because I stake them. So I have a certain quantity of token trees, over the course of time. So regardless of what is happening in the market, in terms of, okay, so beautiful. This is principally my wallet, right? So this is what has happened. Let me get back to the main place. Right. So right now I have 5 point something Cosmos, that's Atom tokens. Right. Good. I want to show you this. So when I bought my tokens, all that I had, let me annotate this. All that I had was 5.1999973 units of Cosmos. Now, after staking this Cosmos, it has gone all the way and increased beyond this volume. Now, let me show you. So I staked 5 right now. So over time, I have earned 0.115377. Now I should be having about 5 units of 5.3 units of Cosmos. If you're adding this one to if you're adding this to this. So I stake 5.199, I have 0.115377. I don't intend to sell this anytime soon, right? So as much as I'm not intending to sell it, I stake it so that it keeps increasing in value, increasing in the number of units, and I don't have to, without necessarily doing anything. Now, if I'm going, I can actually take my rewards and take them out. So look at this. Okay. Let me get um, opportunities as well, and you can easily take advantage of all of those opportunities to stake your tokens on Binance. Flexible and fixed staking options are also available. So for staking, especially on Binance and other, while fixed staking gives you terms and conditions. Oh, you have to stake for perhaps 30 days or 7 days or 14 days or 60 days or 90 days before you can. So just for example, tells me that if I'm going to stake, it's going to take 21 days before I can get it back. If you're staking coins that you intend to make for 1 month for flexible staking so that you can take it out at any point in time. And within that space of time, you will have increased additional value on your tokens. Okay, so there are three main types of wallets. We have hardware wallets, we have soft wallets, and we have desktop wallets. But let's talk about hardware wallets. So for hardware wallets, we have Trezor, Ledger Nano, CoinKite, Cold Card, Billfold, Steelcoin, Billfold Steel, Bitcoin Wallet, and then so many others like that. But of course, the most popular are Trezor and Ledger Nano. I think as at February, as at April thereabouts, Trezor was somewhere around $97 or so, and then Ledger Nano was around maybe $80 or something. But Ledger Nano has various models of it, so they have different prices. I'm sure you can get them on Amazon. And so what this allows you to do is to store your cryptos on the hardware wallet, right? So the address of the wallet, you plug the wallet into your laptop, and then you can access your Bitcoin. Of course, without a laptop, you can easily see the value of your coin, of the tokens that you have in it, And so this is one way to keep your tokens in a physical place that you can hold. It's within your control. In this case, you can keep it, you can hide it, you can take it wherever you are going. But of course, you also have to be mindful of the place of, fire and other disasters that could destroy. In any case, you will always have your private keys to it. So even if you get another wallet, you should be able to restore your tokens on the other wallet. Remember, they are digital tokens, they are digital currencies. So they are movable. So you can easily move it. In case you misplace your wallet, you can get another one and then use your private keys to flip it over to the new token, the new wallet. I showed you the Exodus wallet, which is a desktop wallet. MetaMask is also a desktop wallet. MetaMask, more than anything, uses extensions, Chrome extensions. So, okay, I think I could show you how MetaMask operates. Let me see. Where's my browser? Yep. Okay. This is not where I want to show you. Okay, so this is MetaMask here. You can see this icon here. So this is MetaMask. Yeah, so MetaMask is a Chrome extension. So if I sign in, for example, so this is showing you my MetaMask wallet, and that, of course, shows all of, yeah. So this is my MetaMask account here. So MetaMask supports various networks. This is the Ethereum mainnet. There's Rapstan, there's Covan, Ringby, Matic, there's Binance Smart Chain. So going to my Binance Smart Chain, you can see, so I have this 14.36 Matic here on MetaMask. And so this is a wallet. I have this on MetaMask. So this MetaMask wallet is a desktop wallet, and it's also a mobile wallet because there's a mobile version of it. But on desktop, it operates as an extension. Though there's a website for it, but from the website, it will usually ask you to use the extension, to download the extension to Chrome so that you can easily access your wallet from there. So this is MetaMask wallet for you. So let's get back to okay. So I need to stop the share and get back to my slides. Okay, let me take it, just keep it on my screen so that I can maximize and move between. Okay, I hope we're following. So we have MetaMask, Electrum, Atomic, all these are desktop wallets, Bitcoin Core, Amory, Copay, all of these various kinds of desktop wallets. It's all your choice what to use. I personally try to use, so I'm being as strategic as possible about wallets, so that whatever wallet I'm using, I'm trying to keep a very slim profile of wallets as much as possible. So if there are wallets that I can use for almost everything, then I'd rather use that one so that all my tokens are in one place. But if the wallets are necessary for more than, for other purposes, then I have to employ all that. So you can see I'm just Exodus. So I use Exodus, which has a mobile wallet, So I use Exodus both on mobile and on desktop. And then MetaMask, I use both on desktop and on mobile as well. And then Trust Wallet, yes, that is like the other major mobile wallet I use. All other mobile wallets that I use are wallets that are specific to certain tokens. So I have the Yoroi wallet, which is for Cardano. I have the ICX wallet, which is for Icon X wallet, which is for ICX or Icon. And then those are the two. Then, I've just recently subscribed for Vera wallet, which is for VRA. So for some of these tokens, you don't get staking options on the exchange. For example, VRA is not I can't stake VRA on Probit. I'm not sure I can stake it on KuCoin. I've not checked. But my VRA tokens can increase the value of my tokens. Getting airdrops free Airdrops also, I think that's another terminology that was not mentioned. Airdrops essentially are like free token units. They could be fractions, what have you. But airdrops, it's very little, but they're free. So when you stake, you have airdrops, and then those airdrops add up, over time, and then they become something substantial. Let's use Binance. Okay, so I'm just going to log into Binance because I'm going to have a few more things to do with Binance before we end this session. Yeah, so I'm logging into Binance now, and then I'm going to show you what your public key really looks like. So for most people, so Binance has this, security system. So they're sending me a code, and then I'll enter the code to log in. Because if you don't have the code, you cannot get in. Right? So that's 77069. All right. So getting into Binance now. All right. Okay. So let me give an example. Say I want to deposit. Oh, no. Let's go back to wallets. So it is this this public key, that is the wallet address that you use to receive or to send. So let's give an example. I have this USDT now. Let's say I want to deposit more USDT from another exchange or from a wallet, and then I want to deposit. So I click on this deposit here, and then it takes me to where I can deposit. Now you see, this is the deposit address. This address here is what I am going to copy. This is my public key for USDT in Binance. And the same thing applies to any other. So there's when I'm depositing. So I'm depositing here, and then from the other end where I'm sending from. But if I'm actually withdrawing from here, if I want to withdraw US, let's say USDT. Come on, come on, come on. Good. Okay. So this is what I'm going to paste the address in this field. So once I paste the address in this field, I'll select the network, or it will automatically bring up the network, and then bam, it goes. Right. So these are addresses from recently completed acquisitions. So that's your address. That's your public key. Okay, that's a public key. So a public key is a unique personal address that is shared in the blockchain, allowing you to receive cryptocurrency. And then a private key is a sophisticated form of cryptography that allows a user to access his or her cryptocurrency. It helps to prevent a user from theft and unauthorized access to funds. So in this case, your public key, your private key can be anything, it can be a set of words. It can be a set of words. Let me give an example. Let me try and see if I can type something. So let's say you have words like world, you have world, you have fire, you have bingo, you have cash, you have book, you have swell, and then you just have words. It's usually about 15, 16, or 20 words, depends. And then, so you're supposed, and these words must come in a certain order, in a certain sequence. There's number, the first word, second, third, fourth, fifth, to the 12th, or the 16th, or the 20th, or the 25th, or the 30th word. And then you just put those words in. And once you put those words in, then you can gain access to your wallet. And like Master Shinobi said, please do not share your wallet with anyone. Please do not share your wallet with anyone at all. It's yours, it's private to you, and you should preserve and protect the integrity of it, because that is what gives access to your. Unfortunately, MetaMask does not allow you to stake. So until you are able to tidy, until they include that option, I'm sorry, you cannot stake on MetaMask. If not, please, if you have any questions, you can please ask, so that once it's time for Q&A, we can go over them right there from the chat, okay? So you can easily drop your questions in the chat, keep tabs on them from here, from the chat. Thank you. Okay. So like I said, the private key is usually comprised of 12 to 15 random words arranged in a specific order, 12 to 25. So to recover your digital tokens, you must enter those words in their precise order. Avoid storing your private keys on a device, because devices can be hacked. It's recommended to store them in writing. So personally, I have notebooks, little tiny jotters where I write my private keys. I spread them around so that in case I misplace one, I can easily access another one, the others. But I keep them in very secure places where little to no one has access to them. So that's the thing about private keys. Now let's quickly talk about cryptocurrency exchanges. Yes, cryptocurrency exchanges. So by definition, a cryptocurrency exchange or a digital currency exchange is a business that allows customers to trade cryptocurrencies or digital currencies for other assets, such as conventional fiat money or other digital currencies. For example, like I showed you, Binance is a cryptocurrency exchange. There are so many of them, so many of them. Okay, so you can see, so we have centralized exchanges and we have decentralized exchanges. So for centralized exchanges, we have Huobi, Binance, Lbank, BCX, IDCM, Upbit, P2P, B2B, FatBTC, CoinSuper, OKX. Not all of these are very popular, but among the popular ones, of course, are Huobi, Binance, OKX, yes, popular. CoinNeil is fairly popular. HitBTC is also popular. DigiFinex is also popular. Coinbean is also popular. BitForex, yes. Bitmart, of course. Probit, KuCoin, AscendX, Gate.io, all of these are um, centralized exchanges. As Mr. Shinobi said, centralized exchanges usually require KYC. So they require you to submit KYC, basic information about you. They want to know who they are dealing with. And that does not have anything to do with your cryptos. Your cryptos still where they operate. They generally require you to submit your. And then decentralized exchanges do not store users' personal information and funds, unlike centralized exchanges. Users can trade directly from their wallets for decentralized exchanges. So we have the examples like Pancake Swap, Bakery Swap, MDX, Burger Swap, Uniswap, Joe Swap, One Inch Exchange, Binance DX, Dodo. Yeah, there's a world of them. Decentralized exchanges where you can exchange or trade straight from your wallet. You don't feel anything. You just connect your wallet to the decentralized exchange, and you select what you are trading for, select what you are trading with, and then you authorize it. You enter your password, you pay your gas fees, and it's done. Okay. Oh, seems way from charging. Just a moment. Okay. Now, please use both in SafeMoon. And in the time of SafeMoon, you have to buy SafeMoon from PancakeSwap. So buying from PancakeSwap, you definitely will need to. Yeah, so this question is saying, which exchange do you recommend, centralized or decentralized? You should use both. Use both as necessary. There are some tokens that you're going to buy that require you to buy from decentralized exchanges, and there are others that you need a centralized exchange. So for the general use, centralized exchanges are usually more popular. The only difference is that if you're buying from a decentralized exchange, you need to first of all have loaded up your wallet with a token. So you must have bought from your bought tokens in your wallet, and then you're exchanging what you have in your wallet for another through the decentralized exchange. So you are going to, so on decentralized exchanges, you're going to be able to trade. You can farm. You can also do pooling. So there's liquidity pools and all of that. So you can take advantage of all of the advantages. Okay, a chairman has come here. Hey, young man, grow and meet your mom inside. I'm having a workshop here. All right. And then let's quickly talk about stable coins. Just a moment, please. I need to put this young man. Away. Okay, yes. Sorry for the breaking transmission. Right. So you for let's talk about stable coins. Let's talk about stable coins and trade pairs. This is one that a lot of are going to need master pretty easily. So for the I, I hope I answered that question, because that was exactly the very next slide. So you can use there are most of the centralized exchanges. So your interaction with decentralized exchanges will mostly come from buying specific kinds of tokens, like SafeMoon and the like, Polygon and all of those. You're going to exchange. It usually takes about a week or two, sometimes a month, before they get listed on a centralized exchange. And usually that may take a long time. For example, Shiba Inu was available on I think it was available on Pancake Swap. Yes, it was available on Pancake Swap, and no, it wasn't. It wasn't on Pancake Swap. It was available on via MetaMask. So you have to buy via MetaMask and or Uniswap. Those are decentralized exchanges. And then after about a week or two, then centralized exchanges started to list them. So Binance listed Shiba Inu, KuCoin listed Shiba Inu, Gates.io listed Shiba Inu. So as the need arises, like I said, you interact with each of the two kinds of exchanges, right? So let's talk about stable coins and trade pairs. Okay, first things first, what's a stable coin? A stable coin is a cryptocurrency that attempts to offer price stability and are backed by a reserve asset or reserve asset. Stable coins have gained traction as they attempt to offer the best of both worlds, the instant processing and security of privacy of payments of cryptocurrency, and the volatility-free stable valuation of fiat currencies. So, these are stable coins are particularly coins that are generally equivalent to $1 in value. So when you look at most stable coins, they are usually generally equivalent to $1 or a little bit of a fraction less than $1. So most stable coins will usually revolve somewhere between $1 and maybe 0.9999999 or 1.000000009, that kind of thing, but they never increase in value to $2 or 1.5 or 1.3. The highest I've seen is 1.1, 1.2, and then lowest I've seen is 0.9999 something. So usually stable coins are equivalent to $1 because they are backed by reserve assets, which can be dollar notes, gold, or even algorithms. Okay. Let's get back to it. So stablecoins are cryptocurrencies that attempt to peg their market value to some external reference. And in most of the cases we have, they are pegged against $1. Stablecoins may be pegged to a currency like the US dollar or to a commodities price such as gold, and that's very common. Stablecoins also achieve their price stability via collateralization, which is backing, or through algorithmic mechanisms of buying and selling the reference asset or its derivative. So we're going to look at these are some of the 4 categories. Yes, 4 main categories that stablecoins fall into. The first is fiat collateralized stablecoins. These are stablecoins that are backed by the US dollar. So one of that stablecoin is equivalent to $1. We have, for example, USDT, I think tax too. So all of them like that, yeah. And then there are those that are backed by commodities. For example, gold, silver, platinum, diamond, what have you. There are some that are backed by commodities. There are some that are backed by cryptos. So some stable coins are backed by cryptos. So for example, because of the relatively stable price and value of maybe a token like Litecoin, you can back it. You can use Litecoin to back a particular. So once we say, okay, we have this volume of Litecoin, and then we are you are using this Litecoin to back this particular cryptocurrency. That's that, and then non-collateralized stable coins. So these are the stable coins we have. Top 10 stable coins. We have Tether, which is USDT. Tether is the highest valued stable coin. This particular market cap that I have here, $54.87 billion, is as at last week, this week, as at this week, $54.87 billion. That's the market capitalization for Tether. And then next to it is USDC, which is $17.82 billion market cap. Next to that is Binance US, which is $7.7 billion in market capitalization. And then we have DAI, which is multi-collateral DAI. So DAI uses different things for its collateral. It's just been reviewed during the week that Tether is not backing its collateral. It's not backed by just US dollar notes. It's also backed by paper money, paper money in the US. So that's also fine. That is $4.4 billion market cap. Then we have Terra USD. The acronym is UST, which is $2.07 billion market capitalization. Then we have the FEI protocol. The FEI protocol is $1.99 billion US. That's FEI, FEI. And then we have the Paxos standard. The acronym is PAX. That's $1.35 billion. Then TUSD, that's True USD, is $1.13 billion market cap. And then we have the HUSD, which is $1.08 billion. And then X Gold, which is another one. This one is backed by gold, which is $180.35 million market capitalization. And so currently there are 37 stable coins in existence. These are just the top 10 of them by market capitalization, as you can see. So all of these tokens are, so I generally advise or recommend, when you're just starting out, trade against stable coins. It allows you to be able to view your investment and the returns in US dollars, which is easy for you to comprehend than when you're trading against BTC or against ETH, that's Ethereum, or against Litecoin or against BNB. And then, it's difficult for you to factor or figure out, whether you are making profit or not. It's relatively easier. Now, in cryptocurrency, let's talk about trading pairs, because I'll be able to explain all of that together. Okay. Now, in cryptocurrency, trading pairs or cryptocurrency pairs are assets that can be traded for each other on an exchange. For example, Bitcoin / Litecoin, the trade pair will be BTC / LTC. And Ethereum / Bitcoin Cash, the trade pair will be ETH / BCH. Trading pairs lets you compare costs between different cryptocurrencies. Now, let me explain trading pairs. Now, because this is usually a very tough nut for a lot of people, I'm just going to try to simplify it as much as I can. Now, let's start from the bottom. We have corn yam. So this is a trade pair, corn yam / yam. Now, what this says is somebody has corn, somebody has yam. Now, let us assume that you want corn, which means you have yam. Now, if you want to buy corn, but what you have in exchange is yam, your trade pair to buy is corn / yam, meaning that you want to buy corn and you are giving yam in exchange, or you are using yam to buy corn. So the focus of trade pairs is usually the first acronym or the first symbol in the pair. Corn / yam, the focus of the action is always on the first acronym. So the focus is on the corn. I want to buy corn, but I'm using yam. I'm trading yam for corn. I want yam. I want corn, so I'm buying corn with yam. Now, when you have bought the corn, so let's say 10 bags of corn is equivalent to 3 to 1, no, it's equivalent to 10 tubers of yam. 10 bags of corn to 10 tubers of yam, of big yams. Now I have traded 10 tubers of yam. Now I have 10 bags of corn. Then I now realize that, oh, because people are demanding for corn, the value of corn is increasing. Now it is no longer 10 bags of corn for 10 tubers of yam. It is now 5 bags of corn for 10 tubers of yam because the value of corn has increased based on demand and supply. Remember that Master Shinobi said that demand and supply influences the price in the market. The higher the demand, the lower the supply, the higher the price. Now there's more demand for corn, so the price of corn has gone up. Now you can only get 5 bags of corn for 10 tubers of yam. Remember, I already bought 10 bags of corn with 10 tubers of yam, meaning that I got it cheap. Now I can decide to sell 5 bags of corn and I get 10 tubers of yam in exchange. So now the trade pair now is sell. I'm selling corn and I'm getting yam. So I'm selling out of my 10 bags of corn, I'm selling 5 bags of corn and I'm getting 10 tubers of yam. So I have recovered my 10 tubers of yam that I initially traded. And now I have my 10 tubers of yam back and I have extra 5 bags of corn, which I could get additional 10 tubers of yam if I sell it immediately. So I would have doubled my tubers of yam with this particular trade that I've just made. You get it? Now let's bring it a little closer to our current day. The focus of this trade pair is the phone, because the pair is phone USD, right? So I want to buy a phone, one Samsung, or let's say one Camon 12X, let's say. One Camon 12X is what is equivalent to 1,000 US dollars, right? So I can buy one Camon, Techno Camon X, Camon 12X with 1,000 US dollars. So I am paying 1,000 US dollars and I'm getting one Camon 12X for it. That's the trade pair I'm buying. Now, if on the other hand, I already, let's say I pre-ordered Camon 12X and I got like 12 of it, or 10 units of Camon 12X of the phone. I got 10 units of that phone. And then now I realized that, oh, right now, the value of one Camon 12X has gone so high that it is now one unit of that phone is going for about 2,000 US dollars. And I have 10 units of that phone that I bought. So what do? I say, okay, I want to trade. I want to sell the, 5 units of the phone at $2,000 each. So whatever it is, buying or selling, the focus of the trade is always on the first part of the trade pair, right? It's always on the first part of the trade pair. So I'm buying the phone, or I'm selling the phone. So if I'm selling the phone, that means I have the phone. If I'm buying the phone, that means I have the second part, which is the US dollars. So I'm using US dollars to acquire the phone. And when the value of the phone increases, so let's say I even bought it for $1,000, and then I realized after a while that because demand is high, then the price of the phone has gone up. And now 1 unit of that phone is equivalent to 3,000 US dollars. Now let's say I bought 2 units of it. I sell one, I bought 2 units at $1,000, and now the price has increased to $3,000. And then I sell one of those phones for $3,000, and I still keep one phone. So I got 2 phones with $2,000. Now the value of one phone has increased to $3,000. Then I sell that one phone for $3,000 and I keep one phone. Now I've got my money back, my $2,000 that I used for the 2 phones, and I've got extra $1,000 on it. That is 50% ROI. And I still have a phone. So that's how trading works. Now, but there's also the chance that I bought the phone at $1,000. And then after a few days, the value of the price of the phone crashes from $1,000 to $700. But I bought 3 at $1,000 because I intended to sell it, because I believe people are going to rush the phone. And because people are going to rush the phone, I bought 3, then I'm going to sell 2 when people rush the phone. Unfortunately, the price of the phone drops to $700. What do I do? That means I have lost $300 on each phone. So if I'm going to trade it, then I'm going to have to do that. The only thing, I have 2 options. Either I cut my losses, because if the phone has gone down to $700, that means the chances are that that phone is going to continue to lower in price. When I check the indicators, that means they're about to release another phone. And because they're about to release another phone, the price of this one has dropped. Right now, this one is already $700. I bought it at $1,000. It's better I sell it now. I sell them off now before the value decreases beyond that $700. That is how I can cut my losses. So I can either sell all 3 for $2,100 and know that I have stomached, the $900 loss on it. Or I sell 2 and I keep 1. And I know that, okay, I've simply lost only $600 on the 2, and I'm using one of the third one. Now let's move to GBP NGN. That's another trade pair. So for those who involved in forex or currency exchange, so I have Naira. I want to buy Great Britain pounds, GBP. One Great Britain pounds, let's take it that it is 650 Naira or 700 Naira for 1 Great Britain pound, right? And so I decide that I want to buy 10 GBP. And that 10 GBP amounts to 7,000 Naira. And then a few days later, I look at the exchange rate and I see that, right now, 1 GBP has increased in value from 700 Naira to 720 Naira or 705 Naira. And I say, okay, out of my 10 GBP, I will sell 5 of it, or I'll sell all 10. And then I make 7,050 Naira on it. And that's how trading works. That's how trading works. You can see now I have bought GBP with Naira. Now I want to sell. I'm selling GBP. As always, the focus is on the first part of the trade pair. And then let's bring it to cryptos. BTC/USDT can be BTC/ETH, BTC/BNB, BTC/PAX, BTC/DAI, BTC/LTC, or LTC/BTC, HBR/BTC, what have you. So in this case, what this is saying is, I have USDT, I want to buy BTC, or I have BTC and I want to sell it for USDT. Now, if you do not want USDT, but you have BTC and you want something else, what you should do is to look for the correct trade pair. So what you have and what you want should be in the trade pair. So if it is USDT/BTC, for example, that means that the focus is on USDT. So if I have BTC and I want USDT, what I would likely say is BTC/USDT. So, but if I have BTC, I want to sell BTC, that means I want to sell BTC for USDT. But if I have BTC and I'm seeing a trade pair that says LTC/BTC, I have BTC, that means that I want to buy LTC, but I have BTC. I'm buying LTC with BTC. But if I want to sell my BTC, yes, I'm selling my BTC to buy LTC. So the focus, you must also always make sure that your trade pair is centered around what you have and what you want. Just make sure that what you have and what you want are in the trade pair. But the actions to buy or to sell is focused on the first part of the trade pair. I guess that's simple enough for everyone to understand. Yep. Now, let's move to using Binance. This particularly for those who are very new to cryptos, this is how to use it. Now, Binance is available on all app stores, on Google Play Store and on Apple Store. and you can download it. You should download it. Download Binance. That's the most recommended. If you are in Nigeria, that's the most recommended. And of course, in the US, there's Binance.us. So you need to download the app first. When you download the app, then next thing is to register. So I have created this code. If you have already set up a Binance account, you may not necessarily need to use this, but if you have not, you may need to use this code. You can use this code. This code allows you to lower your trading fees and also get 5% of your trading fees that you pay till infinity. So for till infinity, 5% of all the trading fees you get that you pay will be returned back to you if you register with this code. So this code will be available during the coaching. I'll make it available during the coaching so that you can have access to it, to utilize it. So you get 5% of your trading fees till infinity, forever and ever. As long as you trade on Binance, whatever trading fees you pay, 5% of it comes back to you by using this code to sign up. And then you also have lower gas fees when you register with this code. That's the first thing. And then P2P. So you can buy tokens on Binance using the P2P feature. So let's head over to Binance, and then I can show you how to use the P2P feature on Binance. So let's pick it up from wallets, and then all right. Okay. So let's take it that you have already logged in, and then you come to P2P. Remember KYC, you must do your KYC. You are going to upload a digital ID and an ID, your international passport, preferably. And then the ID number, you're going to do all the on Binance. Okay, so we go to that. You can easily navigate around using Binance. Yep. So it's a bit low. Okay, slow down. Network is a bit of coming back into the source about. Oh, yeah, to Binance. Let's be able to. Okay. All right. So you can buy from P2P. So how does the P2P work? Let's just quickly get through so that if the network stabilizes, we can get back on it. So this is how it works. The first thing is you as a buyer, you come on to the P2P platform, and then you identify the tokens you want to buy. Once you identify select the kind of token you want to buy, you look at a list of offers from various sellers, and then you select the one you want. Now, there are key things to look out for when you are doing this. You want to look out for the success rate, the completion rate of the person. You want to look out for the price, and then you also want to look out for the limit range. So if what you want to buy is about 50,000 naira worth, and then somebody is offering something minimum limit 100,000 units, 100,000 naira, maximum limit 1 million, you definitely cannot buy from that person, even if the price is low and the completion rate is high. So you want to look out first for a seller that is offering something within, at least that is the minimum is either equal to what you want to buy, the amount you want to buy, or lower than the amount you want to buy. And then you look at the completion rate of the person. Is it high enough? Like something percent, 89, 80 or something percent, Then you want to go for that, and then you look at the price. Usually the price does not matter so much because the prices are usually within a certain range, maybe one or two naira difference, or even fractions, decimals. And then once you identify the seller, you proceed to buy, you enter the amount of Naira you want to spend. Once you enter the amount of Naira you want to spend, it will show you the equivalent number of units you are going to get of the particular token that you're buying. And then once you do that, you pay to the person. So you make payments to the person's account, right? Once you make payment to the person's account, you notify the person via chat right there on the P2P platform that you have made payment. And then the person is going to confirm to Binance that they have received the payment. So Binance should release the funds to you. And then the funds will be released to your P2P wallet right there in Binance. So the first thing that happens is that the seller funds their escrow account. So like I say, okay, I have 8 USDT. I want to sell the 8 USDT. I go on P2P, I click sell, and then Binance is going to lock that 8 USDT. I'm not going to be able to use it for any other thing. So once, except I say I'm not interested in selling again. So someone is going to come up, you see my offer, the price, the number of units available, the minimum amount, and then they make an offer for it. They transfer to my account. I will have entered my bank details. They transfer to my account. Once they transfer to my account and I confirm that I've received the money, then I confirm to Binance that the person has received the money. That I've received the money, that Binance should release the cryptos to the person, and then it gets released to the person. It's as simple as that. Usually it doesn't take more than 5 minutes or 15 minutes for the entire process to be completed. Of course, I wouldn't advise you to do this at night when the person is asleep. Binance usually will truncate the transaction or cancel it if it exceeds 15 minutes before you initiate that you have transferred to the person. So please do it during the day when everybody's awake and alive. And if possible, before you proceed to transfer, chat the person up right there on the platform. Let the person know that you're about to make payment. Usually the person, if the person is online, the person will hint you up and tell you, oh, I'm online, please proceed to make payment. And then you can make your payment and bingo, you receive it. Please do not put price ahead of, don't put price ahead of completion rate. If you are seeing someone with low completion rate, but the price is unbelievable, that is likely a scammer. Please be mindful of scammers right there. Let's check and see if the network is okay. Network is up and doing good. So we go to P2P trading. Okay, so this is how we buy tokens on P2P here. So as you can see, so here now I want to buy. I select what I want to buy, whether I want to buy USDT or BTC, BUSD, BNB, ETH, NGN, DAI. Let's say I want to buy USDT. So look at this person. This person is offering at 495.35. Available USDT is 2.25 USDT. Minimum 1,000 Naira, maximum 1,114. So if you wanted to buy like 50K, you can't buy from this person because you can see the highest value is 1,114. So it doesn't make any sense, even though the price is low. Then look at this person here is offering 495 HM Swiss Pay, 495 Naira, 40 kobo. And then the person has 45, 20,000 to 22,000 Naira. That's the maximum. I want to buy 50K, except I want to buy it in bits. If I don't want to buy in bits, I want to buy it straight, then I got to look for somebody else. This person has 91% completion rate, which is impressive. This person has 75% completion rate, but look at the price, 70,000 to 470,000. What I want to buy is 50K, so I need to keep searching. This person here is 15,000 to 24,000. So personally, I'd rather look for the range first. Once I get a good range, okay, so I can find, okay, this is 5,000 to 40,000, very, very close. So if I think this person is fine, 91%, 495, okay, I think I could do with this. I can buy 40,000 Naira worth from this person, and then I can go back and buy another 10,000 Naira worth from, oh, this one is 15,000. Okay, let's say from this person, no, none of this is even, okay, maybe 10,000 from this person. So it's just 0.01, it's less than a kobo, about 1 kobo difference. So I can buy 40,000 from this person and buy 10,000 from this person. And then, so let's give an example. Buy USDT. So let's say I want to buy USDT from this person. I want to buy 40,000 naira worth of USDT from this person. Okay, so it's going to show this, and then I'm going to enter 40,000. So if I buy 40,000 USDT, it's going to provide, I'm going to get 80.71 USDT. I'm buying 40,000 naira what? I'm getting 80.71. Remember, see, the payment limit time is 15 minutes, and then this seller's payment method is bank transfer, right? Terms and conditions, pay and wait for confirmation. Note, no cryptocurrency related terms while sending money. Okay, so let's say I click buy USDT. It's going to take me on to the next page, which is going to give me, oh, okay, so that means somebody has probably bought from this person already. So that means I need to go back and refresh. I need to go back and refresh this page so that I can get other offers. So that means there are more offers now. So anytime you see that message saying, please refresh page, either someone has bought or the amount I'm trying to buy from that person is not available. Now see, these are new orders, 50K. You can see that here. So I can really just pick this and then say I'm buying 50,000. So it's showing me the limit, 50,000. And then I'm getting 100.94 USDT. If I click continue, it's going to take me to the next page where I'm now going to make payments to this person. Okay, so the person's phone number is there. And then, so this is it. This is the person's account details. You don't need to see that. Don't pay attention to that. So once I make payment to this person's bank account, I'm simply going to come up here and then I'm going to click transferred next. Once I click transferred next, I can share messages with this person from here. I can enter a message here and send to the person, to tell the person that I'm in. And then if I think I do not want to proceed with this transaction, I'm not interested any longer, I can click cancel order. So once I click cancel order, I can say the reason I do not want to trade anymore. And then I can cancel and order is canceled. But because I'm not trading with the person, I'm canceling the order, right? So that's typically how the P2P system works. And then, you can always master that much later. So let's quickly get into the second module so that we can wrap up the class. This is the crux of the matter, how to choose an investment strategy on cryptos, trading cryptos, how to choose an investment strategy. So let's get right into it. So the first strategy is long-term investing, which is where you hold a token for a long period of time. Well, by recommendation, I would recommend ADA now. I may not recommend Coty and Dent as much. I recommend Cardano, that is ADA. For long term, if you are going long term, you may want to hold on to Cardano. Others would be Matic. For the long term, these are fantastic projects that you probably want to pay attention to. Of course, you may also want to look at Solana, which is Sol. So for the so you can look at Cardano, Matic, and Solana. These are three tokens that are fantastic for long-term holding. You'll be able to do a lot of good for yourself with them. They are very solid projects, have very long-term value, very good long-term value. So, so this is one strategy. Buy low, leave it for at least 2 years, 3 years, and then by then the value of that token will have risen. Of course, you can also do long-term with the likes of Ethereum, yes, because generally Ethereum is projected to usually do around okay, let's go to coin market cap. Ethereum is projected to do around over 500% over the course of 1 year. Yeah, so let me look out for Ethereum. Okay, yes. So Ethereum right now is 2,407. And then we're going to look at the charts for Ethereum. You see the price change of Ethereum over time. So over the last 1 year, let's say over the last 1 year, you want to see the value, the price change of Ethereum. So over the last 1 year, so in the last 24 hours, Ethereum has risen by 16%. That's trading volume has risen by 16%. So okay, just show you the, yes, this is it. So this is a little about Ethereum. So far, so good. The net growth 0.69 value of the value. So over time, Ethereum usually does somewhere in the range of over 500% over the course of a year, and that's usually a very impressive return for Ethereum. So over the last one year, see the performance of it. You can see it's $207 as of May 24th last year, and today, May 22nd, Ethereum is $2,415. So imagine the price difference. The price difference from 200 and something to 2,000 and something. That's more than, from 207. Yes, that's more than 100 times increase, and that's about over 900% over the course of 1 year. So this is how, if you bought Ethereum last year, this is what you have had this year, and that's the usual experience of most people who go bullish on Ethereum over the long haul. So that's the first strategy, is to hold for a long period of time, and then the other is day trading, which is where you buy a token and sell for a profit after a short period of time. There are quite a number of them, but you need to be a little careful with this. Here, you're going to need shields, you need tips, you need signals, that say, okay, buy at this price, sell at this price. It could take a few days, it could take a week, it could take a week and a half or 2 weeks, but the token, based on indicators and historical data and other factors in consideration and news or other stuff, it's been seen that it's been projected that the price of this particular token is going to rise. And so if you buy it right now at this price, it will rise. You can make about 30% profit, 5% profit, 10% profit, 15%, or 40%, 50%, or even 100% if possible. But in most cases, day trading usually accumulates like between 5 and 20% or 30% in very fantastic returns, between 5 and 20%, modest returns, and then, but the fact that you are doing multiples of that, over the course of a week is what gives you the return. So if you make 20% of $100 is $20. I mean, yes, 20% of $100 is $20. So if you make $20 and you can do that 5 times within a week, that means you doubled your money. You've made $100 in returns. So that's how day trading works. So there are all of this, but right now we're in a bear market. Day trading is not advised. I don't advise day trading in a bear market like this. So it's advised that you keep a low profile with day trading. So BTT, that's BitTorrent, BTG, Bitcoin Gold, LTC, Litecoin, NEO, Cake, that's Pancake Swap, BNB, Tron, TRX, all of these are very fantastic for scalping on a daily basis. And then we have the swing trade. This is what you can accomplish in this bear market. So in this swing trade, this is where you're buying a token when the price falls dramatically, then sell for profits when it rises to a desired price. So looking at the market currently, if we go to Binance, we can look at the market and then we'll see what's happening in the market. So on the market, you are able to see, okay, so this cake, let's use fiat market. Okay, beautiful. So BTC is 41, ETH is 2007. Ethereum was hit an all-time high of 4,200. The chances are that Ethereum is still going to still drop beyond lower than this 2,400 and something. Bitcoin is currently 38,000. Ethereum is 2,004 something. Okay, let me see. Okay, so look at this Doge. Doge is 34 cents. I mean, it's still rather low. I can't advise a swing trade on this. I mean, so if you enter on Cardano at 1.5, Cardano did not hit double, so it's not really a good one to go. Matic, I wouldn't say you should enter. Dot, yes, you can latch in on Dot. Dot was about $40 pretty recently. So if you enter Dot right now, it's $23, $23.75. Hey, that means when it corrects back to about $40, you can actually let's look at it. Let's look at Dot. That's Polkadot. So entering Dot right now, that is $23. You can easily pick up on it for a good price, and then by the time the market is correcting back, you can hit. So as you can see here, this is the $40 mark. So there was a time that Dot was $40, and this was just a few days ago. Just a few days ago, Dot was $40. Okay, so you can see at the bottom here, on the 19th of May, Polkadot was $40 on the 19th of May, and right now it's $23. That means that if you buy at $23, you can make almost 100%. So the price in red here is the current price, and then this is $40, and you can see the date at the bottom. The date at the bottom there is 19th of May. So that shows you that you can achieve a swing trade on Polkadot with Polkadot if you shoot a swing trade on this. This is the high, the ATH of Polkadot, it was 48. So 100% is very, 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 very feasible. Very, very, very feasible. But based on market indicators, the price of Polkadot is still falling. So you can still easily wait for it to drop to lower prices, perhaps 20 or something before you buy. So, swing trades are very, very easily achievable in a time like this. And I think it's something that you can ride on. KCS, that's KuCoin token, is currently about $6, I think, about $6 or $7. And that token hit about $20 about 3 weeks or 4 weeks ago. So it means if you are jumping on KCS right now, you can easily make ×3 of your money when it's correcting back to about $18 to $20. And that's a fantastic one. VRA is currently about less than 3 cents, about 3 cents plus or less than 3 cents. And it has capacity to jump up. UBX2. So all of these tokens are tokens that have very high capacity to hit huge realms. And you can make the most. Oh, VRA is 1 cent. VRA is 1 cent. And this same VRA was about 3 cents. So if you buy VRA at 1 cent right now, by the time it's hitting 3 cents, you have done ×2. ×2 of your money, more than ×2. It's about 1 cent, 1.7 cents. So if you're going to make ×2, that means VRA is going to have to hit about 3 cents. about 3.5 cents, you know, and that's easy to accomplish. So this time, this bear market that we are in is an opportunity for swing trade for many people, you know, and I think it's a chance for you to get in. Let me add this before I close this class. It's important that you have rules. You have to keep your FOMO under check. Yes, even though you're saying it, have rules. Minimize your risk as much as possible by setting a cap on what you will invest per time, except you are pretty too extremely high level sure that if I invest $1,000 in this, it's going to rise and I'm going to make my money on it. You know, so except you have checked the fundamentals of the token. Remember, as Master Shinobi said, do your own research. If there's a Telegram community for that particular token, join the Telegram community, see what's happening there, see what is being said. Look out for the news about it. Go on Google that particular token, see what news is coming out about it. And also go to CoinMarket's calendar, search CoinMarket's calendar, check out what's happening about that token. This will give you insight to know exactly what you're doing. But as much as possible, have rules, set your rules for this token, set your rules for investment. Do as much as possible. If it is $100 that you're setting as the maximum that you would buy for each token per time, you know, so if it's a maximum of $100, set the $100, buy it, and don't shoot more than that. If you must shoot more than that, ensure that you have done your fundamental research properly and you have seen that this thing is a no-brainer. But set your rules. I have a friend who invested in a new token, Xenon Pay, you know, and because the fundamentals were looking good, you know, he bought about $200 and he was going to push in a little more. But I said, hey, stick with the rules, minimize your risk. Let this $200 do well. When this $200 has done 2x or 3x, that is times 3 of the investment. So when this $200 increases to like $600, then you can take out your capital of $200. Excuse me. Take out your capital of $200 by selling maybe half of it. So you can sell half. Sell half. Take out $300 out of the $600 value that you have now, and then leave the remaining. Then let your profit now be the one to do the work for you. So have your rules. Once my investment hits 2x or 3x, I will take out my capital and then I can leave the profit. When the profit doubles again, I can scalp again, take out. Remember, the goal is always to take profit. The goal is always to take profit. Many of you must have read a little about how I made 900% profits. I made that profit on Dogecoin, and I put in what I can afford to lose. And within 3 weeks, 2 weeks, I bought it. I bought at 5 cents. Next thing, Doge had done about 6x. Doge had moved from 5 cents to 25 cents. And then before I closed my eyes, it was on 30 cents. That's times 6 of my money. That's about 500%. What did I do? At that point in time, I sold half. I took out my capital and also took some profits, and I left the remaining half. And then the price of Doge continued to increase. It went up to about 45 cents. I scalped again, took a little out of it again. I invested with the profit I took into another project. And then I left the remaining. Right now, I have about 60 units of Doge left. Doge is currently about 45 cents, as we saw on Binance. Let's check it. Okay, so Doge is 45 units. So here's Doge. Okay, it's 35 cents right now for Doge, 35 cents. The all-time high is 39 cents. In this bear market, I am still in profit. You can see I'm in a profit of 7x on Doge. Right now, that's 600%. I'm still in profit of 600% on my Doge. And that's what I'm saying about these things. Let me just show you. Yes, I said I was going to staking, right? So on Binance, where you see where you can stake is on that end, right? Okay, so I'm going to show you all my staking. Okay, so Doge, when I staked Doge, I staked 60 Doge coins towards the end of April. And then I'm on a 1.55% every 7 days. I get 1.55% of my total Doge every 7 days. And this is my cumulative interest on Doge over time, over the last 7 days. Today's subscription, this is what I've got on Doge. And here, right now, my Doge has increased to 61 point something. And you can see it keeps increasing. This is Harmony. I had 65 units left. Harmony has increased to 65.76, and it keeps increasing. XLM, I had 34 left. It keeps increasing like that. And all of this, so this is where token works. You can see 7 days, and it keeps going on and on and on. So I'm not doing any locked staking on Binance. So all of them are flexible staking. Zilliqa is also there, 53, and then it has increased to 53.4. So the staking keeps on, just increases the number of units. And then whenever the prices rise back, if I want to sell, I'm going long term on all of those coins I've staked. So I'm not planning to sell them anytime soon. And then they're all just going to keep increasing in value, right? So that's typically how it all plays out. And then, so let's just round off this class. So thank you so much, everyone. It's been a great time. Wow, 2 hours, 3 hours thereabouts of this session. It's been such an amazing experience. So please, you can easily reach out to me on Twitter at David Adeleke, and you can reach out to us via email, CulverTrustCapital@gmail.com. Oh yes, our Instagram account is CulverTrust at CulverTrustCap on Instagram. Of course, we'll share those details with you on WhatsApp during the coaching. Please save this number on WhatsApp. You can always reach us here, directly on this number on WhatsApp for further updates and questions. So that ends the class today. If you have any questions, please, the floor is open. So the floor is open for questions. Anyone with questions before we call it a day? If you have questions, you can unmute yourself and then ask your question.
Yeah, hello. Thank you, Mr. Adeleke.
Pleasure. You're welcome, sir.
Yeah. I have a question to ask. I'm actually into forex trading.
Okay.
And I didn't particularly know so much about the crypto, so I took interest to at least have an idea of how it runs. And how I'm thinking is going to be something not so far, or something very close to forex trading, which I see is something similar actually. But there is a platform we use in forex trading, which is MT4.
Yep.
I saw in the way I saw something like that. You display the chart like that. Does it mean we can trade crypto just the same way we trade forex like that, like online real time like that?
Yes.
Because you didn't really show that, but
Let me get back to that. What you're saying exactly, I get that. So that's what you're saying is called trading view, right? Where you can see the charts, you can see the live charts of a particular coin. As you can see, it's right up now.
Yeah.
Fantastic. Yes. So exactly the same. It's almost the same thing. The only difference is that forex trading is based on fiat currencies only, while cryptocurrencies trade against cryptos and also trade against fiat.
Okay.
All right. So as you can see here, the trading pair here is BTC USDT. Both of them are cryptocurrencies. However, you can also trade BTC against USD in some cases.
Okay.
Yeah, but in place of regular fiat currencies, that's why we have cryptos that are equivalent to $1. So that you can have that stability when you're trading cryptos against that. But you will not likely have you won't likely have USD. So for example, we have NGN, a cryptocurrency that is equivalent to the value of the naira.
Okay.
Do you understand? So in cryptos, we trade against cryptocurrencies and equally trade against fiat currencies as well. And that's the uniqueness of cryptos. But Forex, you have to trade fiat against fiat, either Australian dollar against Japanese yen, or yuan against US dollar, Great Britain pounds against Nigerian naira, Canadian dollar against,
Now,
So
do you recommend this live as against?
Yes.
Okay, I want to ask, do you recommend this live trading approach? Just we do
Yes,
forex trading when talking about cryptocurrency.
Yes, it's very important that you have a live view. On Binance, once you select any trade pair, it will take you to the live chart. So it's a feature that is embedded in Binance, and of course most other exchanges like KuCoin, Probit, and Co. So this is KuCoin, for example. I'm loading up KuCoin, as you can see. So KuCoin too has the same thing. You have the same trading
platform,
features. Yes. So the same thing as is happening in the market live, you can see it. So you can make a decision on what price you are buying, when you want to sell. You can check the historical charts and all of those things. So I have various. I have TRX. This is Tron versus USDT. Tron USDT pair here that I've loaded here. You can see this is live. You can see the order book here. You can see the recent trades on this side here. So as you can see the order book moving. You can see the recent trades moving. All of these are showing as it is happening right now. So this give you a first-hand, real-time idea of what is going on with this particular cryptocurrency at this very moment. So the price is 7.7 cents right now. Okay, 7.7 cents, and then you can see the frequency of purchases, the total that is being bought, the volume that is being bought, and all of that, and you can see the price. So these things give you an idea of what's going on. You can easily see whale activity. So when Mr. Shinobi was talking about a public ledger, so when you make trades, it's open. I can see who is buying and who is not buying. And when a whale is in here making purchases, I can technically see how much is going in. So you can imagine this now. This is about $27,000 the amount, the volume of TRX, 38,000, and then this is about that, So I can see what's happening. I can see who is buying and who is selling, and the volumes that they are pushing, but I don't know who. And that's where the anonymity comes.
Okay.
Exactly. So these are completed trades that are happening on that side. I can see everything, and it's available as well on Binance, and each person can see exactly what's happening. So you can see the order book here too. You can see how it's flowing, who is buying and who is selling. You can see the trades here. So these are some of the ways, and just as it is in forex trading, you can set your trades. These are trades that are set to sell when the price hits this particular price. So I've set new to sell when it hits $150. Whenever it hits it, I don't have to be online. The system will automatically sell. HBR BTC, when it reaches price I've set, it will sell. ESTC BTC, once it reaches there, it's going to sell. So I don't need to be online Okay, and of course, there are stop losses that can be used as well. I'll explain a you can set a stop loss to say if the, just like when I made the illustration, you can actually set the stop loss goes lower than 900. Once it hits $900, sell because I want to cut my losses, to $100 instead of anything beyond that. Instead of me selling at $700, I come and I realize that it is now $700. It has dropped from 1,000 on it. I can set a stop loss for the system to sell it at 900. If the price drops below 900, sell immediately, and automatically the system will sell it. So that's how stop losses work. But in the higher level of the trading class, you will be able to do much more with stop losses. Well, go in depth on how to use them. Yes, that's the crypto trader masterclass.
In the master class, you'll be able to teach us the strategy to do this live trading profitably.
Yes, that's the main focus of the master class. Yes, for those who have, let me load up the master class. Ivy, where is it? It's not here. Oh, okay, just a moment. I believe most of us have, seen the crypto trader masterclass Ivy already before now. Just a moment. Let me bring it up. So that yes. Do you have another question?
Yeah. Is Binance the best trading platform? Is Binance the best trading platform for crypto?
I can't say it's the best, but Binance has one of the slickest and easiest. It has one of the easiest user interfaces. Okay. That's for Binance. Okay. Yes, it has one of the interfaces to use.
Okay.
Let me come in. Let me bring up. Okay, this is it. I hope this thing is going to load up. I'll bring it up. I'll bring it up soon. So Binance essentially has the easiest of all to use, and that's why it's largely recommended. And because in Nigeria, the P2P option in Binance allows you to do a lot more. So you can buy from Binance and all that, and that's not typical for most other exchanges, because you need to pay with your card and all of that. And with the ban on Binance, on crypto, stocks in Nigeria, you probably want to leverage on the P2P option that Binance has. So I will always advise utilize Binance to fund your wallet, and then you can now move it from Binance to any other place. You get, so buy from Binance. If you need to use in any other exchange, you can move from Binance to another exchange. That's simple enough.
Oh, okay.
Yeah. So that way, it's easy for you to deal with. Just a moment. So let me get a file in.
So, Mr. Adeleke, what I'm saying is that if I'm selling through Binance, I can get funds with this ban on cryptocurrency in Nigeria. I can get funds into my local
Naira account. Yes, the same P2P. The same P2P platform. Yeah, so the same way you buy there, same way you sell there.
Okay, straight to my personal local
straight
account.
to your, yes, straight to your bank account. So the person that is buying, will simply be paying to your bank account, and then once you confirm to Binance that you have received the money,
yeah,
Binance releases releases it to the person.
Okay.
Let me. I mentioned I think I showed this earlier. So P2P, if you want to, yeah, for P2P trading. Just a moment, please. Okay, so for P2P trading, so I can say I want to sell, right? But from the previous page, I could easily from my P2P wallet, I can select what I want to sell. So if I want to sell USDC, I'll have to move it from my spot wallet, from this spot wallet to P2P. So I transfer from spot wallet to P2P, and then I can come here and say I want to sell. So this will list my coins for sale. And then you can see it. So I can select Naira automatically. It has detected because my account is set in Naira. And then I'm going to set my price and all of those details. Once I put in all of that, it will list my advert to sell P2P. So that's how it works with Binance.
Okay.
Okay, yes, so this is the just a moment. I'm going to put this in. Okay, so for the benefit of those of us who haven't seen this, so this is the Crypto Trader Masterclass, that will be coming on in a few weeks. So at this masterclass, we're going to be doing quite a lot. As you can see, we're going to be doing crypto trading made easy. So we're going to show you every single thing about how you can do, spot trading, set use stop limits, stop losses, and all of those things. So the in and out, understanding the charts, how to project using the charts, understanding indicators and historical data, and then especially, very importantly, how to find gem tokens. Those are highly profitable tokens that have low price and low cap. Remember, with the market capitalization, the price increases. That means demand is higher. As demand increases, the price increases. But how do you find tokens that have low market cap and also have very low price, but have very profitable prospects? So we're going to show you how to find those kind of tokens, where to find them, what to look out for, all of those things. And then we're going to also give you live trading to trade live in class. So you will have funded your wallet with at least 50 USDT so that you can trade live in the class, and then you can also do something very solid with it, and then make it through. So typically, we're going to have this for 3 weeks. This is going to be one of the most intensive workshops we're going to have, and everyone is welcome. For those who want to really go gaga with this, you want to go parabolic with your profitability with cryptos, you should be in this class, and much more. So I think that brings me to the end of the class. Thank you so much, everyone. It's been a great time. If you have further questions, please send them via WhatsApp. I will be able to take them on. We're going to add you to a group on WhatsApp just to guide you through the final phases so that you can stabilize and land properly and get started. So for everyone in this class, you'll be added to that class, and that will
That's where we take it up from for the coaching. Thank you so much, everyone. It's been a great time. I hope you enjoyed the class in every single bit of it. Please, just before we leave, I'd like to have your feedback, how the class has been for you. Please drop comments in the chat area. Let's have a bit of what you have to say, what your experience has been in the class. Please let's hear from you in the chat section, the comment section. So everyone, you can unmute. Everyone, please unmute and let's hear you. Let's have your comments about the class. How was it for you? What was your experience? If you want to talk, please unmute and speak. If you want to leave a comment, please put it in the chat so that we can cap the class with this. Waiting for your comments. Please, please speak. Please, Miss Oluwadamilola, please speak. You can unmute yourself and speak.
Okay. Hello, everybody. Good afternoon.
Good afternoon.
Okay. So I've had a terrible network, very bad network, very, very, very bad. I kept sending messages, and then I was encouraged to keep trying, and I just eventually connected. It kept logging me out, actually. So I just eventually connected. So honestly.
Okay. So some comments coming in. Oluwashina says this training gave a detailed walkthrough on the fundamentals of cryptocurrency trading. It was insightful. Thanks to the facilitators. I will kickstart on the journey and hope to take it to a professional level. I like that over time with coaching guide of CulverTrust Capital. Thank you so much. We'll be pleased to walk you through every step of the way. Happiness, it was an interesting one, an eye-opener, but still need some guidance. Of course, you have the guidance. And that's why we're here to ensure that everyone, makes it through and settles down properly. Our goal is that every single person who has been on this workshop, in this class, and those who will be listening or watching the videos, is for you to be able to, go from that stage of, I never knew anything about cryptos, to that stage of, hey, I now know so much. I'm very confident I can make my own trading decisions, my own investment decisions by myself. Even if once in a while I need to ask, what others think. Yes, that's very good. That's not a bad one. But I mean, I'm confident enough to be able to handle things and run my business, run my investments, and monitor them and see to it that I'm profitable. And more importantly, that everyone here will be seriously profitable. Like I said, I have more than doubled my investments in cryptocurrency between January and now, more than doubled. Even though there is a bit of a dip in the market, I am still in profit. I'm still profitable. And that's the joy of it for me. Yeah, some people are crying foul because they never had an investment strategy. They never knew, they just heard about cryptocurrency and they just carried money, put it in, and me too. I mean, I have money in crypto. But then I always say, do not invest in what you know nothing about. And I, stepped in when there was no reason to, because the Nigerian government had even just shut down crypto activities in the country. But that was when I went to pay for a training to attend and learn and know what this is all about so that I can make informed decisions about it. And looking back over the last 5 months, I can say categorically that I am so happy I'm grateful for this decision that I made and this step that I have taken. And I believe everyone here will also have the same experience. Thank you so much, everyone. It's been a very exciting and memorable time with you all. We hope to connect on the other side of life. So please save the number, join the group. We'll drop the WhatsApp number on the group so that everyone can join in. So you can save the number, join the group. For those who already have connections with the group, with the number, please keep it intact and enjoy. We'll add you to the group and everyone can flow. Thanks, everyone. Have a pleasant day.